We operate an investing platform that serves customers on all stages of their wealth building journey. Today, if you become a Betterment customer, you can set financial goals, select managed investing portfolios or single stocks, use retirement planning tools, or a cash management offering. And we're sort of originally known as pioneering investment advice over the internet and sometimes called a robo-advisor.
Hi, everyone. I'm Annalyn Buckberg. I'm Chief Product Officer at Block's Bank, Square Financial Services. Block is a payments and financial services company, and I'm very happy to be here today.
Hey there. I'm Dan Swislow. I lead public policy at Mercury. I've been in the fintech world for about a decade, and before Mercury, I was actually at Block. So I won't be saying any bad things about Block on this panel. But Mercury is a fintech, not a bank. We partner with banks to offer financial tools, banking tools, primarily to startups and small businesses. So we started off offering things like checking and savings accounts, add credit cards, lending products, invoicing, bill pay, all the kind of tools an entrepreneur or a founder might need to start and run a business. We now have about 250,000 startups and small businesses around the U.S. using Mercury. And about 70% of them join within 6 months of incorporation. So you're often talking about newer businesses. We care a lot about, making the lives of entrepreneurs easier.
Great. So the panel is called Bank Fintech Partnerships. And so our first question is just going to focus on why do those partnerships form in the first place, right? So can each of you speak to what kind of work your firm does in partnership with traditional financial institutions? And then how are these relationships mutually beneficial for both the fintech that you work for, but then also the bank counterpart?
Chime's, like I said, we're not a bank, we're a fintech company. We work with two banks, one's based in Oklahoma, one's based in South Dakota, Bancorp Bank and Stride Bank. It's a great relationship between the three of us. So our relationship is directly to the banks. We don't have any sort of middleware providers in between us. We have a direct relationship with the bank, and the bank has a direct relationship with our end customers. Our customers are everyday Americans. I bet there's several people in here who are Chime customers, if I had to guess. There's about 8 million of you across the country. And what we do is provide everyday services. So a bank account with FDIC insurance, a high-yield savings account, a credit card, a debit card. These may not sound like groundbreaking innovations, right? These are products that everybody has. And I think it's a lot of that simplicity is what's made Chime so successful. All of our products are designed around the premise of being very easy to understand, very easy to use, very straightforward. We take a lot of the BS out of what financial services tries to kind of make very complicated. People want to have a safe place to put their money, and when they need it, or they have a product they're looking for, it just works. A great example of that is how we do overdraft protection. We have a product called Spot Me. Traditionally, for a long time before, especially before the global financial crisis, overdraft was like a major revenue source for lots and lots of banks in this country. One of our first big innovations is, what if we just didn't do that? What if we just helped people when they were between paychecks and needed extra liquidity? We floated them for $100, $200 until they get to their next paycheck, and we don't charge people for it. And that innovation, which may not sound like a lot, but let me tell you, it was a lot back when we first did it, has been sort of the bedrock of our success. So the reason that's been so successful for us is our customers really love that product. And so when they come to Chime, those deposits end up sitting in the community bank's balance sheets that we work with. So Bancorp Bank is about a $9 billion bank. Stride Bank is about a $3.5 billion bank. But those banks were much smaller before they started partnering with Chime. Stride, when we first started partnering about 5 years ago, was less than $1 billion. We've been a tremendous part of their growth. And what those banks do is then they take a lot of those deposits and they lend those out to small businesses in their communities. Stride has a giant mortgage business. They do a lot of lending inside of the state of Oklahoma. And all those deposits that we help bring in, through our partnership, they can turn around and really be the engine for economic development in their region. So it's a great relationship for us. We are able to have FDIC insurance and execute all of our products and services across the country. These are both OCC regulated national banks. And those banks we partner with get fee revenue from us, from the customers that we bring in through their interchange, through swiping their cards. And they get to use the deposits that we bring in to fund all their lending activities. So it's a great relationship that works for us and for them. And I think, if you look at just Bancorp stock price over the last few years, but as our growth has gone up, they've been able to capture that growth as well. And so I think we think of ourselves as a great example of how this kind of relationship can work out great for people when you're doing things sort of like the right way with the right partners, understanding compliance, understanding how to work with regulators, and being able to bring it to market products and services that customers really appreciate.
So Betterment works with many banking partners across our investing business, our cash management offering, and our 401k platform. Focusing on cash management, Betterment offers a cash reserve high yield cash account where we allocate client deposits in interest-bearing FDIC insured accounts at more than 20 different participating program banks. It allows us to give customers up to $2 million in FDIC insurance, $4 million for joint accounts, and a high yield interest rate of 3.75% as of today. And that higher interest represents meaningful additional interest that everyday Americans could get relative to a traditional savings account at a big bank. And that is sort of one example of a fintech innovation that, parties like Betterment and Chime have brought to market. From our perspective, we very much think that bank fintech partnerships are wins for customers, wins for the bank, a win for fintech, and honestly, a win for the banking system more broadly. Customers benefit from higher interest and higher FDIC insurance, as well as the ability to sort of manage their cash alongside their investing assets and increase competition from a wider range of providers. Banks benefit because banks are able to access a new source of customers and deposits. And the deposit base that they're able to attract from a fintech partnership diversifies their customer base. And often we're working with many regional banks, particularly in and around the Midwest. We also work with Bancorp, and we work closely with NBKC, which is a bank in neighboring Kansas. And so they're able to access customers and deposits from our national platform that they otherwise wouldn't really be able to get in their home state. And then for the fintech, obviously we're bringing innovation to financial services. We are responsible sort of for the client relationship. And so that helps our banking partners because it reduces their costs of customer acquisition and their costs of servicing customers because the customer relationship is owned by the fintech. And then they also benefit because our fintech, they get some comfort in that we're regulated, and so they have assurances that our record keeping and our legal and compliance processes are, fully compliant. And then I think, one of the more interesting points that we've seen, particularly over the last couple of years, is that bank fintech partnerships can provide real stability to the banking system during periods of financial stress. And one thing that we noticed anecdotally is that in the spring of 2023, during the failures of Silicon Valley Bank and Signature Bank, our cash reserve deposit and withdrawal activity was remarkably consistent with prior and future periods. And looking into the data, because we obviously wanted to figure out what was going on, there were sort of three contributing factors. One, which was that customers were diversified against the risk of any single one bank failure because we were working with multiple banks. They were also diversified against the risk that their deposits were uninsured because we were able to stack FDIC insurance across multiple program banks. And then lastly, and this is a big component of it, is that when we work with our banking partners, we negotiate with them for their preferred capacity for deposits. And in exchange for guaranteeing some deposit base, they're willing to pass along and guarantee a rate of interest. And so even despite sort of the financial stress during that period, we were able to maintain and then actually raise our APY, which made the offering all that more attractive during the time. So that's a lot of information there, but it's very much indicative of how bank fintech partnerships work for banks. They work for fintechs. They drive innovation, and they are good for the banking system overall.
So I'll actually answer this question from two different angles. So I've been at Block. We were formerly known as Square for about 8 years now. So I've been fortunate enough on my journey there to have experienced the time when we were, absolutely reliant on our bank partners, but to also be a part of starting and opening our ILC, our bank. And so, Block as a payments company, or starting off on the Square point of sale side, we always needed to have those bank partnerships really to help expand financial access. We do it today. We partner with banks on the acquiring side. We partner with banks on the issuing side. And back when I started, we were also partnering with banks on the lending side. And what we found is that by having access, to that near real-time data, really allowed us to leverage, AI, which you heard about in an earlier panel, to be able to underwrite faster and to be able to extend credit to really those Main Street businesses, those small coffee shops, just like the one across the path here, and underwrite loans as small as $10K. And that has been, immensely powerful. Without having that bank partnership, we wouldn't have been able to go out and test that out in the market to really establish that product market fit. In fact, an alternative would have been to go through the 50-state, patchwork of licenses to be able to do that on a national level. And we found that partnering with banks has been a much more effective way to do it, both for our customers, for our business, and also for the banks that we're partnering with as well. Now, fast forward to 2021, when we opened Square Financial Services, we've been able to expand our banking offerings. Today, we offer high-yield savings accounts to those small businesses that use Square as point of sale. We're able to offer them a great product where they can effectively set a percentage of their daily credit sales and automatically put those into their savings account, whether they're saving for a rainy day fund. We see the primary use case there is actually saving for seasonal taxes. And we found that has been a really helpful product, both for the bank to help raise deposits naturally and organically within our ecosystem, but to also provide that product to the small businesses. We also have been able to expand our lending program as well, and we've continued to extend small dollar loans to the small businesses that process at Square. Since the bank's inception, we've originated almost $15 billion in small business loans, which is pretty remarkable. What's next for us is just earlier this year, very similar to that small dollar lending program on the small business side, we're also expanding access to the underserved on the consumer side. And we've just launched our new consumer loan product, Borrow, which has an average loan size of under $100. We utilize that underwriting in a very similar way that we did on Square loans by being able to leverage the cash flow data that we see from those consumers who are using a Cash App as their peer-to-peer and also as some of their banking services.
A bit of a similar story. I want to talk about one thing. There's 4 big companies up here on this panel. If you're a small fintech just starting out, and you're maybe a 10-person startup and you're trying to innovate in this space, you're probably not going to go and apply for a bank charter and wait a year, and then wait a year, maybe more, wait another several years in the de novo period. It's probably not the type of thing a 10-person company might do. But a bank partnership solves that problem, and especially bank partnerships with smaller banks that are flexible and nimble and are willing to kind of work with startups on that and really innovate new products. So when we were a really small company, that's what made the most sense. It didn't make sense to apply for a bank charter. Our founders weren't bankers, and I think most of our founders probably weren't bankers. And while a lot of innovation is coming from inside the banking industry, a lot of innovation is coming from outside of it. And bank fintech partnerships have been core to that. None of this fintech innovation that you've seen over the last 10 years, these products that many of you probably use, happens without innovation coming from outside and being able to partner with banks in order to speed that up so you don't have to wait for your own bank charter. that's something that we did early on. We now have 4 bank partners, all smaller banks in North Dakota, Arkansas, California, Connecticut, offering things just like bank accounts for businesses, but also things like credit cards, simple products, but with a product that is tailored for small businesses and startups exactly what they need. So our founders were entrepreneurs, they were startup founders, and they didn't see a product on the market that really served them the way that they needed to run their business. And they wanted to build that, and so they were able to partner with banks to do it. As we've grown, and now we have 1,000 employees, we're a multi-billion-dollar company. The partnering with additional banks has allowed flexibility for us to offer different types of products, to partner with banks that offer different types of services, to really have intimate, direct relationships with our bank partners and be able to work on things like regulatory compliance together and offer great products with those partners over time. And I think this was touched on before, but broadening the deposit banks of our bank partners, which are generally smaller banks, not the biggest banks in the country, is really important. And one stat I'm sure many of you know, 40 years ago, there were about 15,000 banks in the U.S. Now there's about 4,000 banks in the U.S., right? There's been a significant consolidation of banking in the United States, and banks, especially smaller community banks, banks that aren't in some of the major cities, need to find ways to innovate, need to find ways to broaden their deposit base outside of the small communities that they serve in order to survive. And so we have intimate partnerships with our with our banks and are really thinking about doing that. One thing that wasn't mentioned a little bit, the other thing, we say we have 4 bank partners, but actually we also offer products through sweep networks, which is another interesting innovation where if we want to offer a business the ability to have deposits that are insured by the FDIC past the $250,000 limit, you can partner with a network of banks, say 20 banks, to put say a small business puts $5 million in an account, you spread that $5 million across the sweep network, so they have insurance from each of those banks, they have greater safety, and also the deposits are spread out across a network and is even more valuable to some of these smaller banks. So banks are vitally important to everything we do, and even if you get to a place where you graduate kind of out of, or you're able to create your own bank as a bigger company, these partnerships are massively important to starting up.
Great. So our next question sort of connects to something that Anna touched on in her previous answer as well. So Square's point of sale system for sellers has made it easier for merchants to set up their payments infrastructure. What has Square learned from small businesses that utilize their payment infrastructure about what they need most? And I think one thing I would just highlight with what Anna got into in her sort of first answer was she mentioned the coffee shop just across the street here and, how they do their payments. For me, I live in DC. There's some people who live in DC in the audience here. I think of Eastern Market in DC, which for those that aren't familiar is basically like a series of like pop-up stands of people who are selling. It's partially a farmer's market, so you have people who are selling like vegetables and fruits, but then you also have people who are selling paintings and art and rugs and just all these different sole proprietors. And if you walk through Eastern Market in DC, you see a lot of people using Square for their payments. And, you have a unique perspective, Anna, because you have a lot of small businesses and then even sole proprietors who are using your payments infrastructure for their small business. So just talk a little bit about that relationship.
Yeah, so starting out, access to capital, right, is number one. And, I mentioned before our average loan size. You're just, the larger banking institutions are just not built to really cater to that customer base. And we're really serving those who are underserved, that maybe don't have the credit history that's required in the traditional payment space to either sign up to take credit card transactions, or today, perhaps their business doesn't have the longevity or the tax forms of the performance to go to a traditional lender. And we found that, from a customer acquisition perspective, we have such an alignment of interest. The company Block was founded on the purpose of economic empowerment, and that rings true in everything that we do, because as what we call our sellers, our small businesses, as they grow, we grow. And we have that alignment of interest to continue that, to ultimately continue that flywheel. outside of capital, I would say it's time. And our sellers want time back, whether it's someone who is looking to start up a bakery and their passion is baking, but then they find that they're spending all of their time looking through the receipts and going through taxes and preparing payroll and supply and inventory. And what the Square brand has really done is leaned into that to say, what types of products and services can we offer to these small businesses to really help them grow, to help them make that sale, to give them that time back so that they can continue to focus on exactly what it is that they love to do, continue to focus on their passion, and effectively taking away some of those worries that, small business owners 30 or 40 years ago just, unfortunately had, spent most of their time doing. So I'd say that those are the two things, capital and time back.
Got it. All right, next we'll go to Ms. Fitzgerald. So we talked a little bit in some of the earlier panels about generative AI and AI more broadly, but I think Betterment has a unique perspective on this from the investment side. So with the increasing popularity of generative AI, where do you see the future of robo-advisor and investment tools going for retail investors?
Sure. So Betterment has been in the business of using technology to serve clients from its founding, from when we pioneered bringing investment advisory services over the internet. And AI will undoubtedly be transformative, and we're very excited about the opportunities that Gen AI in particular has from a financial education perspective to give customers information that they can easily understand about how to, how much do I need to save for my child's college education, and then not just answering that question with a number, but how do I go about saving for that? So there's incredible potential for AI, particularly when coupled with data aggregation and being able to intake large volumes of client data, whether it's your financial profile, your linked bank accounts, your mortgage, any debts, your other investments, and really putting together sort of more of a holistic picture of what your financial life looks like. But that being said, we are approaching AI thoughtfully. As a SEC investment advisor and fiduciary, we very much understand that it is our responsibility to ensure that the advice we give clients is accurate and in their best interest. Right now, we use very sophisticated algorithmic portfolio management systems, and our algorithmic advice is based on a series of client inputs, so your financial profile, your risk tolerance, your investment objectives. And that leads to an expected set of outputs in terms of portfolio management and portfolio allocation, which is intermediated through code. And we have a whole set of policies and procedures and processes designed to ensure that our algorithms are functioning as intended and giving customers the advice that we would expect. And this is consistent with what the SEC as our regulator expects. But with Gen AI, it's much harder to do that. It's more of a black box for how client inputs lead to financial advice outputs and how you could ensure that that is functioning as intended and accurate. So we're approaching that very thoughtfully and excited about sort of the potential for AI to reach customers and helpfully make Americans more comfortable receiving investment advice in a digital format. But being very thoughtful about the regulatory approach there. And I guess to piggyback on what was talked about at lunch, we are very much watching sort of state regulatory efforts around AI and are generally supportive of the principles-based framework of the federal securities laws and advocate generally for a technology-neutral approach.
Got it. Mr. Plant, can you speak a little bit about the budgeting tools that Chime offers? And do you feel that services like credit monitoring and budgeting can help transition a relationship with a customer from being based solely on banking services into one that's a little bit more extensive than that, and maybe even goes into something like financial advice tools or advisory services, especially when you're talking about somebody's personal budget?
Yeah, so Chime, we try to always keep our customers' best interests in mind. I think also we balance that with not trying to be paternalistic, like you're spending too much on X or Y. So I think for us, I think really the beauty of what we do is to keep these products themselves simple. People want to know how much money they have. They want it to be there when they expect it. And being able to use technology to help people do their own budgeting, I think for us is sort of the best way to go about doing that. We don't believe it's our role or any other bank's role to sort of tell people what they should be spending their money on or not. That's the customer's decision to decide. What we want to make sure people do is they understand how much money they have, how they can best manage their finances on their own. That's something that they should be doing. I think one thing that we're actually pretty excited about, we talked about AI a little bit, is there's a lot of tools out there that are going to be really helpful for that. I think one of the most used categories for AI questions is actually financial advice, because people, they don't know who to ask. They don't have that trusted person. It's a very personal topic for them. I think one thing that I look forward to personally to see more of is companies like Betterment and Chime and the companies up here that using this technology, which is going to totally revolutionize, I think, how a lot of financial services work, to start providing some of these better insights, but keeping the customer in charge, keeping the customer in control of everything they're doing. It's their hard-earned dollars. It's not our place to sort of tell them how to manage their budget, but we'll make sure they have the tools at their disposal to do the management of what they're trying to do. It's not something that we spend a tremendous amount of time focused on in terms of how we help educate people, but in all of our blog posts and all of our kind of online content we want to make sure people have the exposure and have the ability to get to those tools if that's something they're looking for.
Mr. Swislow, what makes Mercury a popular option for banking startups, and what are startup firms looking for that Mercury fundamentally understands?
Yeah, I think so. It's helpful to tell a little bit of our founding story as to why I think startups have really flocked to us as a platform that they want to use. Our founder is a serial entrepreneur, started a company in the UK. It was successful. It was kind of like a UK version of Yelp. Moved to the US, started another company in San Francisco. When he started that company in San Francisco, he thought to himself, this was a little easier to open a bank account in the UK. The financial tools there were a little bit more seamless. And then he started working in San Francisco, eventually sold that company too, but that company worked with app publishers, and they would pay dozens of app publishers at the end of a month and send payments or wires out to different companies. And it took days. It was really, really hard for him to do. So around 2012, early on in that San Francisco company, he was already thinking to himself, how can this banking system for startups and small businesses be improved? He got to 2017, he sold that company, and he realized it hadn't really improved that much. And he'd seen all these other tools for small businesses and for startups get improved in the last several years, all these great technological innovations, and banking had not really done for him what he'd seen elsewhere. And so he decided to start Mercury. And Mercury was built with the ethos of being a bank for startups. We're not a bank, but partnering with banks to allow banking for startups. And so everything that we build is intuitive to what small businesses, new businesses, startups might need. Integrating wires, integrating bill pay, invoicing, all the things that you might need. So it's not just, maybe a big bank, the bank account that, someone had in the 1980s and making a website for it, and that's pretty much the functionality you get. But really building from the ground up software and a user interface that meets the needs of an entrepreneur. And we're at the point where more than half of every Y Combinator class, Y Combinator is one of the biggest startup accelerator in the US, uses Mercury for banking. Tons of small businesses, e-commerce companies, new businesses are using us. In fact, we talked about Silicon Valley Bank. When Silicon Valley Bank collapsed, for the most part, the top two places where those businesses went were JP Morgan Chase and Mercury. So interestingly, we've seen just a huge demand for the type of services that Mercury offers. And, I think it's really important that some of that innovation has been coming from outside, coming from entrepreneurs, coming from the people that we're actually serving. Our founders are entrepreneurs. So you see that reflected in marketers know about NPS scores, Net Promoter Scores. The typical traditional bank kind of hovers. This is a ranking for companies on how much basically your consumers like it, and it ranges from negative to 100 to 100. Traditional banks usually float in the 30s. We're somewhere in the 80s usually, up there with like Starbucks and Southwest Airlines. Like, there's a reason for that. We're not offering anything particularly different. We're offering bank accounts and credit cards, but we're doing it in a way that is seamless to an entrepreneur and to a founder, and exactly built for what they need on a daily basis, so that it's intuitive and it's easy to use.
Great. Switching gears to sort of the consumer-facing side here. So Ms. Fitzgerald and Mr. Plant, both Betterment and Chime, have components of financial literacy ingrained in their services they offer customers. Can you speak to the importance of financial literacy in today's economy, and how can technology firms work to ensure consumers and investors are getting the most of their money?
Sure, I'll go first. Financial literacy is tremendously important for retail investors. At Betterment, we focus on financial education, but simplified, really trying to use technology to provide our clients the right information in the right amount at the right time for them to make optimal financial decisions. How we do that is through, layered content, tool tips, intuitive design patterns, and then providing sort of additional methodology and deeper dive content pieces for people that want more details. I think, we'd also be remiss not to talk about the power of defaults and automation that fintechs have brought to encourage positive financial behaviors for everyday Americans. Thinking about the power of auto deposit, auto enrollment, and auto escalation in your 401k, automatic bill pay. Those are just some of the innovations that really reduce friction and reduce the cognitive load for average Americans when they think about saving and investing for the future. And then I think the last thing that our platform uses is behavioral nudges, which when done in a fiduciary capacity can be a really positive force for good, whether it's encouraging positive investing behavior or helping an investor pause when they are potentially at risk of making an emotional financial decision that will have long-term negative consequences, like panic selling during periods of market volatility. We incorporate in our experience tax impact previews for every transaction, where a customer will see basically an estimate of the tax impact of taking a particular action, which helps, if a customer is truly making a decision that they want to do, they recognize that information is power. But if they're making a emotional financial decision, that helps them pause and realize that there could be sort of negative consequences. And so overall, we think, it's incredibly powerful within fintech, the sort of ability to reach customers where they are, and sort of the combination of content plus automation plus behavioral economics is really important.
A ton to add. I think two specific tools that we use at Chime to help people kind of understand how to stretch their dollar the most. So we have a network of ATMs in the country of, I think, over 60,000 that are fee-free. So when you pull up the map and your Chime app, look for ATM, we make sure to highlight all the fee-free ones. Little things like that, just to help kind of push people along the right direction. We actually make money on out-of-network ATMs, so this kind of goes against some of our own economic interests, but we think it's best for the customer. And at the end of the day, if you treat your customers really well, they'll stick with you longer. They'll tell more of their friends about it. So we actually find using tools like that, that may sound small, to save someone $2.50, $3 or whatever on an ATM. At our scale, that's pretty expensive. But for us, we think that giving the customer the right experience, they're going to stick around longer, they're going to tell more of their friends about it, they're going to use the product, they're just going to be happier. I think someone talked about NPS before. Like, the people who have higher NPS scores, we've seen this in our data, stick around longer, better retention. It's really expensive to acquire a customer. So for every customer we can keep on the platform by helping them help themselves through tools like this, and they can go to whichever ATM in the country they want to go to, and their Chime card will work all the same. But if they know there's one across the street that's free and one here that isn't, we show them where to go, and if they choose to do that, they can. So I think that's the kind of like real world example of how you can help people stretch their money a little farther that may have like potentially a short-term cost to the company, but we believe in the long term it's a much better thing for our members, our customers.
So, we talked about financial education for consumers. Now we're going to talk a little bit about potential financial education for startups and small businesses. So, Ms. Bookberg and Mr. Swislow, both of your firms have a reputation for working with firms that are just getting off the ground. Do you find that there's a need for financial education for these founders or entrepreneurs that's similar to the financial literacy that we just talked about with consumers? And are your firms ever tasked with going above and beyond for some of your smaller clients?
I think entrepreneurs can sometimes be savvier maybe than your average consumer, maybe. But, we're working with companies, as I said earlier, 70% are joining within 6 months of incorporation. Even if they are savvier, it's really hard to start a business. And so part of it is just making that as easy as possible. And a lot of that also is education and baking that in. We have a lot of resources out there. We're not big enough yet to do nearly as much as Block. Block does some amazing stuff. But what we try to do is offer tools like, what does an expense report look like? What are templates for basic things that a startup or a business might need? What does a profitability calculator look like? Different tools that they can use that help just with the basics of their business. The thing is that we work with universities, we work with, we host events, we do all of those things, and we can do all of that. But honestly, the most impactful thing is to meet people where they are. And where we know they are is using our tool. And so building into the tool, kind of like what we were hearing from Chime, intuitive things that allow them to understand the health of their business. A bank account tells you everything you need to know about the health of your business. Money in, money out, profitability, run rate, burn rate, all of the things you need to know. But giving them the insights as they use the tool into the health of their business based off of that information is what is most important from an educational perspective in making sure their business succeeds. Like, you can go to as many classes or lectures or webinars or whatever as you want, but if you're using a tool that is giving you those insights in real time, that's by far the most efficient way that you can receive the help that you might need to make your business succeed. And so we think a lot about how to bake in into the tool intuitive ways to just make running your business easier.
The right thing by asking you to respond first. Now, what I would add to that is, as we are lending in a non-traditional way, and we're not relying on FICO and credit scores, I think one impactful thing that we have done is really provide that transparency across our platform, both to our sellers and also to the consumers, to help them understand, what it is about our algorithms, what it is that we really look for in order to assess creditworthiness and in order to send that invitation to apply to our credit and lending programs. And we found great satisfaction from the customers in just teaching them about what it is that we look for. The number one complaint that we have on our commercial loan program is, how can I get access to more capital? And so it's really important for us just to educate the customer there as to, what are those signals that we are looking for. And the other way that we really look to give back is, we just announced that we have what's called a Square Cornerstone grant program, and through that we are selecting grant winners. We're giving them both capital. They don't have to pay us back. It is a grant. It's a $10,000 grant, and then on top of that, we also offer free marketing services for their small business, and then a year mentorship from a CPA firm to really help them on that tax and financial planning side.
Great. And so, Mr. Plant, you kind of opined on this a little bit as part of a different answer, but talk about Chime's early payday product and talk about what it does for consumers.
So we have a few different varieties. Chime's first innovation was getting your paycheck 2 days early. Most banks now do that, but that was like a decade ago. That was seen as like revolutionary. How does that work? There's no credit risk, but basically the way the payment files come in, the customer can access the money faster. It was a big hit for us. The next one we had was SpotMe. SpotMe is basically takes that 2-day period, extend it out to maybe like a week, where people are between paychecks, but they have to buy gas to go to work or put groceries on the table or they're at a restaurant, they need a little extra cash. The latest one, and I think our biggest one so far, is called MyPay. It's not a payday loan. It's basically an earned wage access product. So as a customer works and earns their wage over the course of a 2-week period, they can pull down up to $500 from their pay before waiting. So the way the payroll system works today, whether you work at Chime or you're a Chime member, you probably make your money and then 2 weeks later you get your paycheck from your employer. But that system, in some ways, is like an interest-free loan to your employer for a 2-week period after you've done the work. So Chime, kind of going back to like kind of who we always are, we're here to help people get their money faster when they need it, when they want it, and do it in a way that they can access it for either free or at low cost. So MyPay it's a huge product. We give out billions of dollars of this on an annual basis. And for most part, people have the ability, if every customer has the access, has the ability to get it without paying a dime for it, if they're willing to wait 24 hours. It's been a big driver for us because people don't want to have to be waiting for their money. It's their money. They've earned it. They've already done the work. They've already been at the job, whether they are working at a restaurant, working in retail, working an office job. We started recently partnering directly with employers through our MyPay at Work or Chime Enterprise channel, where partners like Workday, we just announced a couple weeks ago, will partner directly with Chime to give access to their employees and employees of their companies the ability to pull on their pay. And so these are everyday Americans who are working at universities and in restaurants and every kind of job that are saying, this is my money, I've earned it already, I would like to have it, not waiting for my employer to give it to me a couple weeks from now. It's been a huge thing for us, and again, we always make sure people have the ability to see, this is how much is available to me, this is how I can get more of it, this is how the fees work, if there's any involved, and we let people kind of make their own decisions and drive their own sort of financial health.
Ms. Fitzgerald, what is Betterment's tax coordination tool, and how does it work?
Sure. So built into Betterment's platform, we have a series of tax management features that help, or that are designed to help investors keep more of their returns. Tax optimization is a investment strategy that previously was really only available to high net worth investors who had access to a dedicated advisor, but through technology, we're able to build it into our features at no additional cost. So in order to understand how tax coordination works, first backing up a little bit, when you sign up for a Betterment account, we intake information from our clients about their income, their state of residence, their tax filing status, and whether they have any dependents or beneficiaries. And we use that information to create a personalized tax profile that allows us to estimate their federal and state tax rates and their long-term capital gains rates. And those estimates then drive our tax impact preview, which I talked about, as well as help us personalize the tax management features in our platform, like tax min, tax loss harvesting, and tax coordination. So then built into the platform for every investor in every transaction is a sophisticated tax lot selection methodology, which is an algorithm that seeks to sell securities that will minimize the tax impact of a particular transaction, whether that's a withdrawal or an allocation change or rebalance of your portfolio. Rather than sort of simply looking at tax lots by purchase date, our algorithm is looking to sell securities that will both reduce your drift in your portfolio, but also minimize the tax impact of the transaction and increase the after-tax returns of your portfolio. The great thing about tax optimization is that it helps investors keep more of their earnings without having to, quote unquote, beat the market. And so that philosophy really underlies our approach to tax management. So then tax coordination is another one of our tax optimization tools. It's an asset location feature for clients that are saving for retirement, where you can group retirement accounts of different tax treatments, so traditional, Roth, taxable, and manage assets across those three different account types as a single portfolio. What that means is that the technology will put tax inefficient assets like high growth stocks in a tax advantaged account like a Roth, and it'll place tax efficient assets like municipal bonds in a taxable account, so that looking at your retirement accounts collectively, you're unequally distributing assets across the different tax types to maximize the after-tax returns of your portfolio. So all that is complicated, but what that really means is that it's an example of a fintech innovation that was not available to everyday Americans 20 years ago, but through technology is something that we're able to provide and sort of build into our platform at no additional cost.
Okay, zooming out a little bit. So we're going to have each of you in the line answer this question. And we'll start with Dan over at the end and then work our way back. So can each of you speak to the biggest regulatory developments you're monitoring in your respective space right now?
I can get real nerdy on this one, so if anyone wants to get nerdy after the panel, come on up. But I'll talk a little more broadly. I think you often hear the private sector talk about regulatory clarity. You heard it on the stablecoin and crypto panel. We just want to know what the rules of the road are, and then we'll follow them. That's always true. I think, and you also heard Congressman Flood mention the idea of the speed of government keeping up with the speed of business, which I think in this regulatory environment is nearly impossible. And so one of the things we've been trying to do is think about how we can make sure that the regulatory environment and that the clarity that we seek keeps up with the pace of innovation. One I think really novel idea that's come in the last, that has really come to fruition in the last year, it's an older idea, but is how do we involve the private sector in that regulatory environment, in shaping that regulatory environment and the rules of the road. So we joined an organization called the Coalition for Financial Ecosystem Standards about a year ago. We helped found it. And the idea of this is let's create standards for what a bank fintech partnership should look like. And then let's hire auditing firms to certify ourselves against those standards and tell us how good we did. But let's do it in a way that we're not just writing our own standards and it's just lip service. Let's get the regulators to give their blessing to it. Let's get banks to say that these standards are good. And then let's try and use that as a way to supplement and complement the regulatory environment and the supervision that exists via regulators. The CFES just completed its first certification of a fintech a couple of months ago. ICBA, the community bankers, are involved. AFC, the American Fintech Council, is involved, and a number of fintechs have been involved in this as well. And we think what that does is, even if the regulatory environment doesn't always stay perfectly modernized to each new technological innovation that comes up, the private sector can back that up and can offer sort of a shared due diligence that regulators, that banks, that fintechs can use, right? So if I'm a new fintech and I go and get certified via these standards, I have my book of scores based on the certification, and I can take it to a potential bank partner and say, here, check this out. This is how we're doing everything related to compliance, regulatory compliance, and all the things that we need to do to be a good partner. It really up-levels, I think, the ability for banks and fintechs to operate safely in this environment and for regulators to do their jobs and see the things that they need to see to make sure that, the financial system is safe and stable. So
one of the regulatory developments that I've personally been following closely, and Block has as well, is really looking at some of the legislation that was proposed under the previous administration, FDIC, just regarding how to regulate industrial loan companies. And very, very fortunate and very happy to continue that conversation with the current administration and to partner with the FTA and others in really making our case through the FDIC's recent RFP to educate and to show, that there is a place for ILCs within the banking environment, and that, we are really serving that underserved consumer, whether it's on the consumer side or the small business side. And what we'd really love to do is just continue to do that, continue to grow with our customers, and to do it in a way that's both prudent and responsible.
We are probably most closely watching the fate of the CFPB's Rule 1033 on open banking. And sort of the industry swirl earlier in the year with the announcement from JP Morgan that they would charge third parties to access their customer data. And while sort of that immediate issue seems on pause, at least for the moment, the reality that a traditional incumbent could unilaterally control and charge for access to its permissioned customer data is problematic and troubling and anti-competitive. We certainly would be interested in seeing a 1033 rule that both prohibits the charging for permissioned customer data and extends permissioning to third-party apps. Like I mentioned earlier, we're also monitoring some of the state regulatory efforts around AI, and generally are interested in sort of promoting the principles-based framework of the federal securities laws on that front. And then to Dan's point, we're sort of also watching the efforts of the Coalition for Financial Ecosystem Standards, and are very much interested in sort of the benefits of rule setting and guideline setting that helps all fintechs play by the same set of rules.
Yeah, not much to add. I think the biggest thing from our side, though, is how this administration and this Congress has been very just willing to engage in the conversation, which has not always been the case. I think for us, we always want to be able to, have a voice. We want to be in the room where we can have these kinds of conversations with policymakers. We believe, and I think a lot of people on this panel have spoken about, much of the innovation in financial services in the last decade or two has come from these companies and companies like ours. And I think for too long, many of those conversations were, kind of the incumbents' territory. And a lot of the fintechs would kind of have to come in the side. I think this administration, this Congress has been, very open-minded about engaging with fintechs directly, understanding the value we're providing to our consumers, the value we're providing to the ecosystem, how we're actually a source of strength. I think many fintech companies last March were seen as like, oh, these are potentially risky places when the various banks were failing. Our customer deposits didn't change at all. Our customers were very steady. That was some of the most stable funds in the ecosystem at the time. And I think having the chance to tell that story, to engage with policymakers directly, hasn't always been the case. And I think for me, there's lots of individual policies that we're all interested in. But I think being able to engage where we really think we have a voice and we think we have a pertinent message is probably the most important thing that that we're interested in.
Okay, next up, we have audience questions. So if you have a question, please raise your hand, and somebody on our team will get a microphone over to you.
Banking's not that boring. Some banking questions are interesting.
Trying to help myself. So you mentioned ILCs, and I'm curious, again, as a program bank, with kind of the noise around if there was a time that you were interested in getting a charter, theoretically it could be now. So why would, other than size of a fintech being a startup, why would or why wouldn't a fintech do that? And do you in any way, shape, or form see this as a threat to the concept of bank fintech partnerships?
I will take that one. I mean, I don't see it as a threat. I think that there's a place to play in this space for everyone. And having been on our journey, I think that it's really important for us to continue that message and to show that we are we can help the underserved markets. I do think that right now is a very interesting place for ILCs, and I know that there have been a few companies out there who have applied. For us, it made sense when we looked at just the cost and benefit of it, and by no means was it an easy feat. It took us 3 years to finally get approval to open our charter, and it took us a year to open it. And then you have to make the investment to really build a modern bank from scratch. We had the benefit of having a parent company that was already in financial technology services space, and so we didn't have to build all of the technology from scratch. We really just needed to build those complementary pieces that plugged in very eloquently within our parent company. And so for us, it made sense for us to do that. And I think that we are now, seeing the benefits of that now that we are out of the de novo period and we're able to expand our product offerings. We're really starting to see both the economies of scale from the cost side, but then also the benefits for our customers. We've been able to expand financial access just this year. We're now reaching more than 2 times the amount of customers that we were previously able to on the consumer side with our borrow loan program, and we just would not have been able to do that without our ILC.
Time for maybe one more question, if somebody wants to do an audience question. Otherwise, I have some I can use. All right, let's do rapid fire down the line because we only have a few minutes. So you guys all of your firms work with different relative size banks. What do you hear are the largest challenges for the financial institutions your organizations partner with? And we'll start with you.
I think for us, our 2 banks are both OCC regulated. It's definitely, I think, regulatory clarity. I think for us, we want to make sure that there's a consistent set of standards applied to small banks, large banks, and when they're trying to bring these innovative products to market, they don't have the same size, or they're very sophisticated, but they don't have the same size and the same influence sometimes as larger banks do. And so being able to work with our partners, be nimble with them, and get the regulatory acceptance is to me the biggest thing for us.
Yeah, I'll just echo regulatory predictability, deposit stability, to the emergence of new technologies like AI and digital assets, and product innovation, and we're certainly partnering with them on all of those fronts.
How about now? Okay, so I'll answer this from the Block side. Recently we've seen some larger banks that we've partnered with just effectively pull out of certain business lines, and while that poses an opportunity for us internally, right, to be able to use our ILC and to vertically integrate, when we look at the rationale for that, it was really due to rising compliance costs. And so I think, really focusing there, consistency in regulation. I think, we've seen, particularly in my seat today, really just to have that need for consistency in regulation just across the different regions would be immensely beneficial.
I'll say 2 things. One of them is the same, which is regulatory clarity. Travis Hill, who's the acting head of the FDIC, when he came in to office early in the year, I was in a meeting with him and he said, we've been doing this backwards, regulation around bank fintech partnership. So over the last several years, there were a number of enforcement actions against partner banks in this space. And then the end of the last administration ended with a request for information on bank fintech partnerships. In general, I think a better order would be to request information on what the regulations should look like, promulgate those regulations, see how they're going, work with private industry on improving them, then enforce against them. It was done backwards previously, and I think a lot of that has to do with just kind of catching up, this kind of pace of business and pace of government thing that we talked about earlier. So that's one big one. And the other one is just kind of reducing barriers for collaboration. So here's an example. Some of you may have heard of confidential supervisory information. I told you I would get nerdy. When a bank is examined by a regulator, the information about that examination, and I'm oversimplifying here, is technically property of the government, right? And it's very sensitive information because, for good reason, if that information got out and people misinterpreted it, it could cause bank runs, especially in the environment that we have now where stuff goes on Twitter and then boom, like, people are leaving Silicon Valley Bank in 12 hours or whatever it was. But that also creates problems and friction for fintechs partnering with banks. Fintechs don't have access to the information about how their banks are being supervised. So if a regulator is telling a bank, you guys aren't doing this right, the way you and your fintech are working together isn't great, you need to improve X, Y, or Z, the bank can't say anything about that to the fintech. They kind of have to pantomime, okay, you fix this, and this is how you're going to fix it because this is how the regulator told us you should fix it. It creates a ton of inefficiency in the communication between the fintech, the bank, and the regulator. It creates a ton of inefficiency in how well supervision is done because remediation is then harder. And so finding ways to reduce those barriers to allow those partnerships to happen in a more seamless way from a regulatory perspective, I think improves the regulatory environment and improves the ability for us to offer products to our customers that are valuable. So there's some reforms around issues like that. I can get way nerdier on 10 other things too, but I'll keep it to those two broad ones.
Great. And with that, we are over time. So everybody, please give our panelists a hearty round of applause. We will transition to NFTs.
All right, everybody's favorite topic, NFTs. I see a few smiles out there. So one of the interesting things about serving in Congress is sometimes, even when you are still learning about a digital asset or about something in the fintech space, your job is to explain it at the VFW. And one of the biggest concerns I hear raised from our more seniorly aged constituents is, my grandson is buying this stupid stuff on the internet and he thinks it's worth something. I was like, well, what's he buying? Non-Fungible Tokens. And I'm like, well, to the children that were born in the 70s, we're talking about Cabbage Patch dolls, right? So I remember when my sister was hysterical because her neighbor, same age, they were 9, got a Cabbage Patch Kid because her mom was willing to go fight somebody at Shopko in Norfolk, Nebraska to get it. And there was a limited supply and everybody wanted it. So to those born in the 80s, I say it's like Beanie Babies. It's like, why in the world are you, a 40-year-old male, buying all of these Happy Meals to get these Beanie Babies? And suddenly people are sorting them out at their divorce hearing between the husband and the wife as to who gets which Beanie Baby. And so then it brings us to non-fungible tokens. And the reality in both of those situations is that that object, that Cabbage Patch doll or that Beanie Baby, was a commodity given the supply at the time, and it was something culturally that Americans wanted or craved or desired or valued. And so today we're going to talk about non-fungible tokens, and I think it goes far beyond my very remedial example. But I want to introduce these two guys. First is Kevin Jacobs. He's the general counsel at Phantom Technologies. We appreciate him being here today. And where are you located? Where's Phantom Technologies?
Phantom is our main office is in San Francisco.
Okay. Are you originally from California?
I'm originally from Alabama.
Oh, my goodness. We could complete the triangle and you could end in Nebraska.
We'll see.
Okay, next is Colin McLaren. He is the engagement director for Solana Policy Institute. Tell us about the institute and where it's located.
So the Solana Policy Institute is based in Washington, D.C., but we represent the broad range of investors, users, and builders on the Solana blockchain. I can talk a little more about that. But those folks are based all over the world, but I think our goal is for them to be able to build right here in America.
Okay, so let's start with a basic question. Explain a non-fungible token. And how was my example with Cabbage Patch and Beanie Babies?
I think it was a great example from something that you can tangibly hold. I would jump back to a much bigger picture of how we understand the internet and the role of something that is like a Cabbage Patch Kid on the internet. There's three versions of the internet that we've kind of understood, and frankly, I'm young enough not to have lived through all of them, really, but many of you are. And there was three eras, right? The first one, which was, whenever newspapers could publish online, was the read era. A very small group of people was able to publish information onto the internet that you would go on and read. You weren't able to participate with it. It was just like a newspaper, but it was on your computer screen. You got it faster, it was cheaper to distribute, and the information was a little more up to date. It had its obvious advantages. Then we transitioned to what was called the read-write era of the internet, which was where a user could read and a user could also write to the internet. You look at Facebook, I go and I scroll through and I read my crazy great aunt's posts. But I also can go and like it. I also can go and write my own crazy post. I can go and look through the marketplace. I can put things on the marketplace. I'm able to engage in a two-way street where I read information from the internet and write it. We've finally entered, with the advent of blockchain technologies, the ability to read, write, and actually own on the internet. And NFTs are, at a base level, a representation of ownership on the internet. That could be images, that could be a skin for a video game character, that could be a song or something that a creator created. But it is evidenced and recorded in a immutable way on a blockchain. It can't be changed. The ownership is very clear and publicly defined, and we're able to exchange that between people for very low friction at very low time cost. And I'll pause there and let Kevin add on.
You're very good at your job, by the way. It also sounds like Chris Dixon's book.
Yes, it
Read,
is.
Write, Own.
Yeah, he's right on the money.
Very much. Yeah, no, that was great, Colin. The only thing I would add to that is that NFTs are also programmable, right? So one kind of very unique attribute to NFTs, and it comes up a lot in the art space, is this idea of adding royalties, right? So I can sell a piece of art to you. In the traditional world, I sell that art, you own that art, now it goes forward, and me, the artist, I can't derive any future value from that. But NFTs being programmable, I can add royalties to that, and in the secondary market, I can, get a piece of that sale in perpetuity. So the programmability aspect is also something that's quite unique to NFTs.
We'll start with you again then. So think back to 2021, the Bored Apes NFT. It's kind of an introduction to the concept of non-fungible tokens. Talk about what that was for this, asset class, and then give some other real-life use cases for NFTs far beyond the creative, the artistic kind.
Right. So in those kind of that first wave of NFTs, like everyone was just kind of flipping JPEGs on the internet, but there was this kind of really cool property that I think is missed, and I think we're still in the early stages of, and it comes up in the context of Bored Apes and some of the other communities like Pudgy Penguins and Nouns, this idea of community, right? So you're buying this NFT, you're buying this piece of art, maybe it's valuable, maybe the value is just as a collectible, or the value is what other people think the value is, but right, there's this other idea of you are now a part of this community, and there are discords and telegrams, and there are in real life events that you can participate in only if you are a part of this larger community, right? So, we're still very much early, right? And this art use case was the first mainstream use case. But there are many other use cases, and Colin kind of alluded to some of them, right? Game skins in video games. thinking way out into the future, you can put things like car titles or real estate titles on the blockchain as NFTs. Anything where you want to validate ownership or provenance, NFTs can be used as a potential use case. Ticketing, disrupting Ticketmaster. I know I pay a lot of Ticketmaster fees.
I think the use cases that get me most excited, I think, are the ones around deepfakes and around verifying provenance, around the things that I think social media is so drastically changing the world. And a fake image of something happening can drive people to do some really bad things and to think some really bad things. It also makes people question things that are very important for them to know are real. I think we have the ability now to verify provenance. You can mint NFTs of images in cameras, and the camera companies are working on this. So that way the journalists have the ability to prove through the metadata that's recorded in the blockchain that the photo they took of a starving child is real and not some act or Photoshop. That the image, the video of a known figure saying something vile is true and not something that was deepfaked. We have this ability to know the provenance of where images and the things that really move our culture and move our discourse are coming from, and that they're real and can be trusted. And I think in a devolving era where the news media is continually questioned, technologies like this allow them some backstop in preventing that narrative from continuing.
That's what makes serving in this area of Congress so interesting. Going from explaining something like akin to the Beanie Babies to protecting the right of free speech and accuracy of information in a democracy. That's the leap, I think, that's most fascinating to folks. Let's talk for a second about, and I'll back up. One of my areas that I'm interested in is the reward space. So I am in love with Delta Airlines, and I'm on a plane all the time. And I always tell people, if the plane is going to crash, I still am not going to be mad at Delta if I'm on one of their aircraft, because they have brand loyalty. I have brand loyalty to them. And I think about the use of NFTs when you are engaging with your customers, you're building brand loyalty. Why is it, if I'm so proud of my platinum medallion status. It's something that I covet. I'm always looking at my points. I use my points to send my kid back home from college or whatever. But I think if I had an NFT that was special to me that I could grant to somebody that I'd earned to get that upgrade to the Delta Sky Miles lounge in the Atlanta airport. That is something I can't do right now because I have to be the one using it. But suddenly it gives me some agency. Are you seeing, like rewards programs using NFTs, and are consumers embracing them, or is that an area that hasn't come to yet?
Yeah, that's something that I haven't seen, but it's something that has been kind of widely discussed, and I think it's a really great use case, and kind of goes back to what I was talking about this idea of community before. As a really powerful future use case for NFTs. I mean, that's something that I would certainly love. And going back to what Colin was saying about this read, write, own, right? Flipping the paradigm on its head, and putting the power back into the user is something that is certainly a powerful use case for NFTs.
There's a really cool project out there. They're building on Ethereum, but it's called Blackbird. Blackbird is it's a Web3 decentralized version of what many people experience in restaurant loyalty. There's no transferability between your restaurant loyalty at one coffee shop down the street and the bar on the other block, and the fast food place on the other side of town. What Blackbird has done, and they're partnering with Resy and American Express, is they're building out this network that does distribute NFTs to people that show up and are some of the first people to eat at a new restaurant. So you're able to get in and be one of the first people to experience it, but you also get to own that. And I know that everyone has experienced someone in their life, and you might be that person that loves to walk around and talk about how you were the first person to eat at the cool new spot, and you did it before everybody else. This allows you to actually own that right, to have that, and to continue to demonstrate that you're a regular. So the more and more you frequent these various places around the app, you unlock new opportunities when you're there. Just like if you were a regular at the same restaurant and they comp you a drink or they bring you out something off menu, you're able to actually quantify that. And for a restaurant in New York or a major city, you're actually able to build better relationships with your customers, but you're also able to identify who are the people in the community that are really leveraging the restaurants in the community, who are kind of the super spreaders that go around that I should be getting in early, how do I entice them to come in, and also how do you create rewards that benefit the restaurant community and not just one restaurant in and of itself. So I think some of those projects are really, really exciting and actually are something that people can use every day. They're only in New York, they're not in DC yet, but I can't wait for them to be.
All right, Kevin, self-custody. People that use NFTs, they like using Phantom because they can self-custody their NFTs. Why is that important to your customers?
Yeah, so I mean,
I should say the self-wallet, but yeah.
Yeah. So I mean, taking a step back, like the wallet has two primary functions in my mind, right? The first one is to secure private key material. Basically ensure that no one except for the user is able to transact in a wallet, right? That's the basic security aspect, right? But the more impactful aspect, that first aspect is very much under the hood. The more impactful aspect is wallets are really your passport to this decentralized economy, into DeFi and into Web3, right? So in order for you to buy an NFT on a Magic Eden or an OpenSea, you need to have a wallet and you need to connect your wallet, right? So in that case, from that perspective, wallets are really the primary user interface for DeFi and for Web3, right? And I mean, why self-custody? It's funny, companies have tried to do a custodial NFT project, and none of them have really gained a lot of traction. And I think it's because NFTs are quite personal. And if they're not portable, and if you're not able to kind of port them around with you, then they become sort of less valuable. So that's why, NFTs and self-custody really go hand in hand, I think.
Colin, you brought up ticketing. How are pro teams, who's using the ticketing right now with NFTs, and how's it really working, and where's it maybe the most impressive to you?
Yeah, I don't think anyone's really done ticketing at scale at this point that I've seen that's as big as I think, it not taking over Ticketmaster yet, but I certainly think it has a ton of potential. I think in sports specifically, I think sports is kind of the home of the NFT. I mean, long before there was the internet, we had baseball cards, and there were very unique and special baseball cards with specific numbers of home runs on them that were becoming very valuable given how rare they were or of a specific issue. And those were kind of a very original collectible. The NBA did a program called Top Shot where they effectively issued specific moments in time in the NBA, and people were able to purchase them and were able to own a specific photo or a moment in time and actually own a little bit of piece of that IP. I believe the project did like 200 million in total sales, which is arguably one of the larger ones done by not a Bored Apes or some of these other more crypto native, but from a what I would call more traditionally native approach, one of the larger ones ever done.
There you go. One of the things that I tie to NFTs when I'm thinking about it is there's got to be a passion for something. It seems like you have to have this emotional connection to something. And one of the greatest compliments, and I love rural Nebraska, I grew up in rural Nebraska, I live in rural Nebraska, one of the greatest compliments I can give people from two towns especially, Broken Bow and Albion, is that people that traditionally come from Broken Bow out in Custer County or Albion in Boone County, they cannot see each other for 5 years. You run into somebody from there, they have really good self-opinion of their community. And they're tight. It doesn't matter if they know each other or not, but you run into somebody from Albion and they haven't lived there for 20 years, they still love Albion. And they have this emotional connection to their town, and someday they want to come back. Think about NFTs as a way for communities to, get young people into loving their town and taking their town with them through the rest of their life and benefiting their town by attaching to NFTs that celebrate the very best of Albion. or Broken Bow. Like, one of our biggest challenges is the depopulation of some of our rural areas, but we have this thing that people fall in love with, the Sandhills or Shadron or wherever they're from, or their high school, maybe it's Creighton Prep in Omaha. I think on the horizon someday there's going to be an opportunity for us to tie that passion back to something that's tangible, that's valuable. Do you see anybody talking about that in this space?
Do you want to talk about NownDAO? Because I think they do some cool stuff with this. I can do it too if you want to. So basically, you sell, there's a DAO is a decentralized autonomous organization. Effectively, it's a large group of people that can vote on things, and they don't know each other, but they can vote on this virtual entity to do things. And I won't go totally into the legal structure because I'm not a lawyer, I just play one on TV, but the structure effectively allows a group of people, a large group of people, to do very cool things. And so effectively what NownDAO has done is they mint an NFT and they put it up for auction. And we could form a DAO right here in this room, and I could create an NFT, and we all could bid on it. And as we bid, we go around, and the amount that it sells for, I sell it to one person in this room. That person effectively joins the DAO by owning that. Since they own this NFT, they're now a part of the community. And so with the funds that we raised from that, as a group, let's say Kevin and I also owned NFTs for NownDAO. We're a part of that organization. I can propose that I'd like to build Broken Bow.
Yeah.
I'd like to build a new playground in Broken Bow. And I propose that. And we all vote on whether that's something we should do. And Kevin and I vote, it's 2 to 3. I don't know who out here got the NFT and doesn't want to help Broken Bow, but the two of us voted for it, we support it, and so we distribute those funds to go build that playground project. And so these are ways that people in a decentralized manner using NFTs could support a town like Broken Bow. People that love it can help fundraise and become a part of a long-term philanthropic effort to benefit Broken Bow using NFTs.
So imagine you're a community banker in one of these towns, and you want to leverage the love that people have going back generations, and monetize it for the betterment of the community, and the leading financial institution in town, which is the local bank, manages the process. I am always looking for ways to put community banks in a position where they participate in this digital asset world in a way that delivers things that they also care about. If you're banking in St. Edward and you're the banker, it doesn't matter who you are for the school bond issue, you are for the church getting remodeled, you are for the community building getting new chairs. So I would just offer that as an intersection for banks and digital assets. And to those 20-year-old kids at UNL, the fact that your small town bank has got an NFT that celebrates the town that you love, I think it helps tie you back. So that's my entrepreneurship idea for the day. Mr. Jacobs, in some of these Web3 games, users can trade NFT collectibles or skins that they own directly through their wallet. What do you think the future of blockchain-enabled marketplaces looks like with this kind of technology? And this is a real issue because if you talk to anybody that's young, they are gaming, and they are gaming into their 40s.
Yes. So I think this is actually one of the most fascinating use cases or potential use cases for NFTs out there. And let's, juxtapose a game like NBA 2K with a game like Star Atlas, which is a game that's a blockchain-based game that's being developed currently, right? You play NBA 2K, you can use your dollars, you can use a credit card to buy VC, to upgrade your player, to modify your player, to buy them cool Jordans in the game. But guess what? NBA 2K 2027 comes out and you lose all of that. You just paid all of your money and you lost all of that. And the New York Times wrote a piece that said that in 2024, the publisher of 2K made around 80% of its revenue, $4.2 billion, in in-game microtransactions, right? Now, a game like Star Atlas is like flipping this paradigm on its head, right? Instead of these in-game microtransactions going and the value going back to Star Atlas, they're saying, hey, why don't you buy an NFT, an in-game NFT, now you own it, right? You can use it as a skin in the game, but guess what? If you don't like the skin anymore, you want to upgrade to a different one, you can just sell it for value and purchase another NFT and continue to use that in the game, right? It's portable and it's composable, right? And I think this is absolutely fascinating. But I will say, going back to that $4.2 billion number, right? You can see that the incumbents have a strong interest in that not happening. I do think this is an area that's kind of ripe for disruption, but it's going to be, I think it's going to be a large uphill battle. But you can imagine in a future state where this becomes the new normal, right? Now every game has some sort of wallet, or every console needs some sort of wallet infrastructure. Every game has some sort of in-game trading functionality where players can exchange their in-game NFTs and skins, and there potentially are also user-created exchanges as well, kind of off-platform where users can exchange and trade that value. So,
I think we know what Kevin's interested in. Colin, what excites you the most about NFTs? When you look at everything, is there a project out there that you look at and you say, that's a game changer?
I think the ability to use NFTs as a way to identify what wallets are able to engage with actual securities transactions. As you know, if you want to engage in a securities transaction, if you want to issue securities, those need to be done to people that have gone through Know Your Customer, Bank Secrecy Act, anti-money laundering practices. And currently, if you just have an unhosted wallet or you're running around with the wallet, you're not able to engage in that transaction. If you're not an accredited investor, if you don't meet all these things and you haven't gone through these processes, there's no real way for an issuer of someone who wants to send you a stock on chain to engage with it. And so what we're currently working on at the Solana Policy Institute is how do you do direct on-chain issuance of public equities? This hasn't, you hear about people being able to trade, Apple on blockchain, and like companies like StockX and Robinhood are doing interesting things around this, but it's effectively where they're representing it on chain. They're representing something off chain, on chain with basically a placeholder. What we would like to do is be able to directly issue shares of stock on chain, which drastically decreases the cost of IPOing. We have seen over the last decades a drastic decrease in the number of IPOs, in the number of public companies, and we're seeing the stage of IPO get later and later and later. At a certain point, effectively, what we're doing is treating the American consumer as exit liquidity for founders. And I don't think that's very good for American capital markets. And so as we build out this concept, we have a proposal in front of the SEC that goes through a bunch of different factors that I won't get into here, but one of them is actually being able to identify which wallets are able to engage with securities. And you can use simple things like NFTs that you can't transfer, that you can code, that you can program to identify what wallets, who are these people that are using these wallets, who are engaging in these transactions, and it decreases friction costs. It's going to unlock American capital markets. We have the best in the world, and I think we can make them better.
Sorry, I love the shout out for Project Open, which Phantom is also a part of. So
that's correct.
Fantastic call.
All right, staying with you on this one, Colin. We've got the Clarity Act. It's under consideration in the Senate. It attempts to wade into, blockchain innovation in the market structure sense. You think it's on track, and in terms of being good policy, and where do we go with blockchain innovation in the future, and how should Congress kind of see it and react to it?
I think Clarity was a fantastic piece of legislation that yourself, Chairman Hill, Congressman Stile, I don't know if he's still in here, all put some blood, sweat, and tears into, and it turned into a really fantastic piece of legislation that I think blew people's minds with how bipartisan the support was, and I think that's due to the great work that they did to make sure that there was broad support for it, that it was a product of broad consensus that they could send to the Senate and say it's time to get a move on. I think a couple things, and Kevin and I were talking about this a little while ago, I think there's a couple pieces that we're, really need to see in legislation. I think Clarity did a great job of that. I think the Senate's market structure discussion draft does a very good job of it as well. We need to see developer protections, people that are writing open source code like blockchains and protocols that exist on the blockchain should not be held liable for things that they can't control that other people are using their code for. They also, if they do not custody or control user assets because they've done decentralized finance, they don't custody or control it, they just write the code that allows the transmission of value. They shouldn't be treated as money transmitters. They shouldn't be required to comply with BSA and AML and KYC because they're not intermediaries.
Very good.
Yeah.
Go ahead.
Sorry. I think that's exactly right, Colin. I think the only thing I would add is seeing those protections both in Clarity and in the RFIA. Certainly, we were heartened, but I just want to call out that DeFi, blockchain, they're rooted in core American values. It's about autonomy, it's about financial freedom, it's about financial inclusion, and it's really important that we see these developer protections, these DeFi protections in the final bill. And that's kind of what we're going to be focused on.
To go back to self-custody, because you mentioned that a while ago, I think Clarity did a fantastic job with the inclusion of the Keep Your Coins Act, and we look forward to good self-custody language continuing to be in the Senate's product as well. I think President Trump did not really get nitty-gritty in terms of market structure. I think he wanted to fire Gary Gensler, and he spoke about self-custody. Those are the two things that President Trump spoke about specifically when it came to crypto legislation. And I think ensuring strong self-custody language remains throughout the Senate's final product that ultimately goes to his desk is going to be paramount to making sure this is a good bill.
Here.
All right. So it's time for questions. Does anybody have oh, we got questions. So you're popular.
Hi, my name is Cindy Robert, and this is a question for you, Congressman Flood. Do you see, because we're a line of realtors right here, do you see putting house deeds on here in Nebraska specifically, and being allowed for all of us to put our houses into an RWA, which is similar to an NFT, and allowing fractionalized shares of our homes?
Yes. So I graduated and passed the bar in 2001, and I went back home, and one of the first things I had to do was do an abstract of a house, which is where the lawyer goes back to the Homestead Act and traces that chain of custody of that house all the way to 2001, and it was mind-numbing. And I don't think anybody does them anymore that I know. I'm sure somebody does. But my law partners made me do it because they said, yeah, you're going to deal in title insurance, but we all had to do this, so you're going to pay the price. You're going to do it. But what it made me do was understand how delicate and precise everything has to be to transfer real estate, and at the county clerk's office. And I think with blockchain and its protection against fraud, there's absolutely an opportunity for our state and others to revolutionize deeds, and maybe you two just react to that for a second.
I think there's been, if you look back, especially in the history of Black Americans specifically, there's been a massive amount of title fraud where effectively titles are stolen from people. It's happened throughout the years, particularly as we dealt with paper home titles and paper car titles. And so we created a industry of title insurance to effectively protect against those kind of things. I think blockchain effectively allows us to demonstrate provenance and ownership over time in an extremely efficient way. And I think in a modernized system no longer necessitates such a robust title insurance regime that we currently have. I think you look at Senator Moreno, what he was doing with car titles on chain, and he really pioneered that in Ohio. He's a car dealer, and he's an incredible leader on the Senate Banking Committee on our issues, but he's also an entrepreneur and innovator himself, putting car titles on the blockchain to allow cleaner, faster, and more secure transfers.
I also think about things like immunizations. I know that's a hot topic, but during COVID, or when my son just went to college, we had to go and get his written out immunizations from 2006 and show to the school. Think about how we could deal in a health emergency when we knew where I mean, you can get into some scary stuff, and the technology is exciting. The privacy issues are also similar. Okay, who's next?
Hi, Mike McLean here. I'm with the Omaha Area Board of Realtors, the director. And my questions were kind of piggybacking off of that. She asked a similar question to what I was going to get, so I'm going to expand it a little bit, thinking about the blockchain company Proppy in 2017 doing the first NFT transfer in Ukraine, and then the Florida examples. But what I'm noticing, they're all limited liability companies. And how can we change that to the point where we go direct to deed? Or, in your opinion, from legal standpoint or policy, maybe that will never happen and maybe future transfers will be all entities and never personal ownership. And then, Congressman Flood, would you be willing to work with us, the state, the Nebraska state, to become the first state in the union to regulate, change some of the contract law to add this NFT transfer?
Well, I'm going to let them answer the first question, and I'll come back on the second. Yeah.
I don't want to touch the first question. That's a lawyer question.
And I'm gonna have to punt that as well. I am not a real estate attorney. I recognize that there are certainly a number of legal hurdles to getting this accomplished, and I'm sure that some sort of legislative solution is required there. I'm not sure exactly what it would take. I do recognize that it probably is much easier to go with an LLC example and kind of sell shares that way. It's just intuitively, that's probably where I would have gone to immediately, but sorry, I don't have a better answer for you.
I also think that one of the things that's in the legislation that we're talking about, fractionalized ownership of NFTs, doesn't allow it to fall under this same carve-out, so you're going to be looking at some securities law implications there. The other thing I would say, and this is a much broader view, is that the only reason we're able to have this conversation is because of the work Congressman Flood, Congressman Stile, Congressman Hill, and many others have been doing to at least get us to a bare minimum of regulatory clarity. I know we've said that word so many times here today, but getting us to a bare minimum of knowing, is this a security, is this a commodity, who is the primary regulator? These are questions that I think we're going to get to work on for the next 10 years around how do we integrate these incredible innovations into each industry and sub-industry where they're going to really start to move the needle for industry and for American consumers.
As to your last question, of course I'm willing to work on it. Here's what I think, though. I think, and I love the state legislature. I loved being a state senator here in Nebraska. I think that states are laboratories of democracy, and I would love it if the Nebraska legislature would dive into some of these issues, because they'll have the opportunity to bring in a county register of deeds. They'll have the opportunity to bring in the local realtor. When you make this kind of policy at the federal level, you've got to have some states out there experimenting, and the state has to come first, in my opinion, before we do something like genius at the federal level. And if I were in the legislature, I would drop everything to help you, because when I did the Nebraska Financial Innovation Act, there was a lot of heavy lifting there, and you need state legislators that have a lot of bandwidth, because when you start messing with the Register of Deeds, you get the county treasurer, you get the county attorney, and the entire county board on your tail right away. So, and their favorite topics are gravel and Caterpillar equipment, and they don't want to be talking about getting rid of the Register of Deeds office. So, who's next?
Another question here.
Hello, thank you. My name is Evan Egger, Executive Director of the Nebraska Bitcoin Association. Yeah. And Congressman, appreciate your shout out to the VFW. I'm a lifetime member here in Nebraska.
Thank you for your service.
Thank you. And I've tried to educate some of my peers about something that we've been talking about, which is blockchain technology. And NFTs, of course, riding on blockchains is only as good as the consensus mechanisms available to those blockchains. For example, NFTs started on Bitcoin because it was backed by proof of work. They've since typically moved to proof-of-stake blockchains like Solana and Ethereum. We've talked about the Oracle problem here today when it comes to tokenizing real assets, and then, of course, now with the settlement assurances, how do proof-of-stake blockchains avoid the centralization risks that Bitcoin does not have? When blockchains are measured by the monetary utility of their native token, how can we incentivize market actors to secure proof-of-stake blockchains so they don't become centralized and then operate as decentralized in name only?
I'm happy to go. I think one, proof of stake validation in and of itself is incentivizing the people that are staking their assets. The Solana ecosystem, for example, is continuing to expand the number of people that are validating and staking on the network. That is not changing. That is continuing in a hockey stick upward. And many of the other proof of stake blockchains are continuing in that fashion. In terms of actually making sure it's not decentralization in name only, I think there have been a variety of approaches to doing that. The maturity test framework that we see in Clarity, I think, is a really, really good start. As it relates to NFTs, those become mature very quickly. As it relates to L1 blockchains, we've seen blockchain and Ethereum both receive kind of that stamp of approval from the SEC in terms of inclusion in like an ETF product. I think that work is ongoing with a variety of layer ones. And I think that we're going to continue to see proof of stake be an expanding part of what is considered in the commodity category and sufficiently decentralized. And I think even if you use the FIT21 decentralization test, there's a range of layer one blockchains that are going to be right in the sweet spot there in terms of sufficient decentralization that doesn't fall back into a decentralization in name-only state like you're referring to.
Kevin, you want to weigh in on that?
Yeah, no, the only thing I would add to that is I agree staking is the way for users to kind of place their vote with a particular validator. The one thing I would also add to that is liquid staking, which is available on Solana through a number of different protocols as well as Ethereum, right? Is another way to have your votes also spread around and continue to further decentralize, right? Because this idea is that it goes back to the stake, your stake goes back to the stake pool. It's distributed among a number of different validators, right? So that further, decentralizes the entire network.
Kevin, Colin, we're impressed with each of you. Thank you for coming out to Nebraska. And with that, we will conclude the NFT panel. Thank you very much.
We'll have a short break now for about 10 or 15 minutes. Please listen for the chime, and we'll come back for our last panel. We'll get this last panel started here in about 60 seconds. If you want to take your seats, we'll start our panel in about a minute.
Check.
That's a hot mic when you turn it on.
That is ordinarily bright.
Yeah. Yeah, I don't think there's any sort of assigned seats. Just jump in. I'm just waiting for them to say that. We're good to go. All right. Well, everyone, I want you to give yourselves a round of applause for sticking around for the keynote moment in today's program. I want to thank Senator Bosar. I don't think he's here to defend himself, but he said, Jason, I would really like for you to moderate the panel that everyone is showing up for today. That's the one right before the bar opens. So very excited to be with you all today. I'm Jason Ball, President and CEO of the Lincoln Chamber of Commerce, and we have a big panel today. I'm going to get them into self-introductions here in just a little bit. With such a big group, I think this is going to be an entire hour's worth of lightning round questions. Just to try to keep it fun today, we're going to be doing rules based on whose line is it anyway. I will be awarding points for the spiciest answers and the hottest takes. For those in the audience, if you ask the hardest question and can stump one of the panelists today, I'll also be buying free drinks at the bar here in a little bit. So take me up on that, please. We have a really great group today that is going to highlight, I think, some of the breadth and diversity of businesses that are here in Lincoln in this fintech space and fintech adjacent space. And so I'm going to ask our panelists, and we'll just go right down the line here. Please do just a little bit of self-introduction. Let them know what your company is, what you do, maybe how long your company's been around, how large your organization is, and something you're proudest about in the product offering that you bring to market. Ashley, we'll go ahead and kick it off with you, please.
Perfect. Thanks, Jason. My name is Ashley Alberry, and I'm the COO of Maptician. Maptician is a workplace management tool, and for all of you new to that specific term, basically what we do is we tell you exactly how you're using your space, where it's most used, who's in it, and how to effectively use it. And we do that by measuring that space, measuring the people in that space, and then we also have kind of simple functions like booking a conference room and booking a seat. But we bring all of that data together to tell you exactly how you should be using your space. And we were actually founded in 2016, but had our first revenue client in 2020, early 2020, which when you're selling into office spaces, that's sure an interesting time to be launching a company. And so at that time, we actually kind of pivoted into several different areas. And today we have 110,000 users, and we're just getting started. We're located here in Lincoln, and we are headquartered right downtown with Nelnet. There's several Nelnet employees here, and Nelnet is actually the entity that came beside us early as a customer and then an investor, all three rounds. So thanks for having me, and excited to talk about workplace.
Fantastic. Thank you. Steve.
Yep. Good afternoon, everyone. Steve Matheson. I'm with Fiserv. I'm the head of payment optimization there. For those of you that aren't familiar with Fiserv, you might be more familiar with a name that's a Omaha legacy First Data company that started in 1969. Our core business is basically we help retailers and businesses and financial institutions do three basic things, right? One, run core banking systems. Two, help issuers issue cards and manage receivables. and then we help retailers accept payments. So we sit right in the nexus of payments inside the United States. We're a Fortune 90, probably a Fortune 100 company today. But some fun facts, 27,000 payments a second, 300 plus million bank accounts that we help service, 300 plus million credit cards that we help service, and 6 million retailers. So we are in a very blessed place in the ecosystem, and just pleased to be here.
Thank you. Kyle?
Yeah. No. Click that on.
Hey everyone, I'm Kyle Tutt, co-founder and CEO of Pinata, and we are crypto file storage. So started the company in 2018, and our first use case was actually in NFTs, which was the prior panel. And so what we do is we manage all of the files associated with tokens. So there is a token that sits on a blockchain or a crypto network, and then there are files associated with that. And what we do is make sure that those files are authenticated and that those files are secure. And so we work with people who issue or mint those tokens, whether it's NFTs or meme coins or more serious endeavors like RWAs. They use us to manage their files and ensure that the ecosystem has a reliable way to view and interact with the files themselves.
JP.
Thank you for having me. I'm JP, CEO and co-founder of Exodus. Exodus is an app to manage a portfolio of cryptocurrency. There's 6.5 million people that trust Exodus to keep their crypto secure. And we recently just went public earlier this year, so that was a really big milestone for us. And we were started in 2015 right here in Nebraska.
That's awesome. It's really hard to go after Exodus, and you're like out of here. So I'm Ben Pankinen from Social Assurance. We're located right down in the Haymarket. And we started in 2011, but like many startups, it was a slow roll for a few years. But we work with over 1,000 community banks, credit unions, regional banks in the area of marketing and compliance. We started with the premise that you wouldn't go to your bank as much in the future as you do now.
Good afternoon. My name is Joshua Jordan. I'm with Jack Henry. We're kind of in the same space as Fiserv. We're a well-rounded financial services technology company serving, I believe that the number earlier was given as around 4,000 banks and credit unions, community banks and credit unions in the United States. About 95% of those have some product or service from Jack Henry. We're about to next year celebrate our 50th anniversary. Not quite the size of a Fiserv. We're about an $11 billion market cap company, about 7,500 employees across the United States. We have a nice little subsection of employees in Omaha. I think there's only about 2 or 3 of us here in Lincoln, though.
Well, that means there's room to grow.
Exactly right.
That's right. Ashley's going to recruit you here. We'll look forward to that dialogue later. Let's start with, look, that's a broad array of different fintech-related businesses, and I want to talk a little bit about maybe the uniqueness of doing business in Nebraska. We have some guests here for this. We have some people that are watching online, and I'll probably come back the other direction. But, talk about what makes Nebraska such a good place to do business. What makes the Lincoln Omaha markets for folks that are in these markets? What makes that right for your business? Joshua, you want to kick us off?
Yeah, I think, for me, we do, our company does business in the United States. So, and only the United States. We're not a global company. We only, serve the United States and community financial institutions. And if you kind of look at a map of all the banks and credit unions in the United States, it very much leans heavily from about Colorado to the East Coast, and where most of those financial institutions are concentrated. So being based in the center of the United States, right here in Lincoln, makes it easy to do business with a lot of those community financial institutions. It's, just from a pure logistical standpoint, it's easy to get in and out of Lincoln in Omaha. It's easy to fly anywhere in the United States from here. But also it's a great hotbed for talent. What a lot of people don't know
is there's a subset of university systems across the U.S. and again, primarily in the Midwest and in the East Coast that have fintech as a minor or a focus in a lot of their institutions. University of Nebraska is one of those that has a focus or not necessarily a full minor, but an emphasis, I think is what you call it, in fintech. And so understanding the talent level that we have that are coming right out of college to be able to source, to keep any innovative idea right here in the state of Nebraska, along with you kind of couple that with things like cost of living, ease of access to different travel things, family priority things. It makes it a good place to do business.
Yeah, for us, it's definitely about recruiting people. It's about the connection that we can make to a lot of industry. So it's fantastic to just be able to hit people up for many of you. Like I've hit up for lunch or we catch up and we're like brainstorming on what we're working on. And that's something that I think is rare and not found in a lot of much larger communities.
Yeah, I mean, the talent, the culture, it's incredible here. I mean, we have our CFO and our head of corp dev here, and it's absolutely, the talent is amazing here. What a lot of people don't know is that, that the business environment is very friendly here, but there's a lot of states where the business environment is very unfriendly to crypto companies. New York is one of the biggest ones, and it's very hard to operate and do business in a state like New York. And so just very grateful for the pro-business environment that we have here.
From my perspective, starting a company in crypto in 2017? 15, that's 2018. It was actually really nice to be around people that supported me early on. I think sometimes you could be in places where you maybe didn't have as much support. Now, maybe some people didn't necessarily understand exactly what I was trying to do, but they were definitely supporting me. And so I feel that the support in this community is incredible. And then the other thing is I think that the mindset of people in this community allow me and anybody that comes here the ability to kind of think big and really chase their dreams. And I don't think you can get that in every community that you're in.
Yeah, and I think I would echo everything else that everybody said here. Would just tack on, the environment here for resourcing and the ability to hire great talent. And our facility in Omaha is actually adjacent to the University of Nebraska Omaha, so we have a very tight relationship with them, a strong intern program with that. So that's been a blessing for us in terms of being able to find talent. The other thing I would point out, and I'm not so sure everybody's talked about this yet, is Nebraska and Omaha in particular is uniquely situated in terms of its technology and telecommunications infrastructure, right? Our data lives here. We have 2 data centers in the United States. One of them is here. And that's because, and others like Google and Facebook, others are also choosing to place their data centers here because we're blessed with the investment that the state's made in the last several decades just on telecommunications.
Tough going at the end. But one of the things I was just thinking as everybody was talking are, what would I describe as doing business in Nebraska? Like 3 words. And what I would say is you have a very eager group, you have a very loyal group, and you have a very hungry group. And the easiest way when I say hungry to describe that is, and we have a couple Maptition employees so they'll understand this, we're in a space where there's not a ton of competition, but the competition that we do have is very well funded. And so when we get on the phone with a prospect, they can tell that we are extremely hungry for the business. They know that we will do everything in our power to keep their business, earn their business, and be long-term partners. I think Nebraska is extremely similar to that. Nebraska wants the business, Nebraska's eager, and we're going to make sure that you're successful here. Now, one of the other things that hasn't been mentioned, I think that Nebraska has a unique ecosystem to support businesses as well that maybe not everybody, especially the non-Nebraskans, may not be aware of. And so from our perspective, we actually have what's called support from Invest Nebraska. I already mentioned Nelnet, and we'll probably mention them a couple more times. and then the Nebraska Angels as well. So when we were an extremely early stage startup, we were kind of drawing from those three entities. And then as we progressed, of course you have to have a really good business and the numbers have to look good, but we were able to keep a lot of that money in Nebraska. We just rounded out a funding round and we were able to keep most of it here again. So there is an ecosystem here. You have to work for it, but it is here, and I think that a lot of people maybe just don't realize that.
I'm going to go off script just for a second, and because you got me thinking about ecosystem. You know, I think one of the things that makes Lincoln and Omaha just a little unique is, you know, at least about 15, maybe even closer to 20 years ago, that's when I think some far-sighted people really started to think about what kind of organizational infrastructure, what kind of people infrastructure would be needed to help have more startup activity, more tech-based startup activity happening in Lincoln and Omaha. And it was really interesting when we took a group of people to Boise, Idaho last year for a chamber visit. I remember getting there thinking, oh, we're going to learn so much about the startup community, and coming away thinking, Boise's really great and they're doing a lot of things right, but I think we're out kicking them when it comes to ecosystem building. I know several of you have been involved in, you know, trying to grow different nodes of that ecosystem so it's not one person or one organization's effort. I'll just open it up to the whole group. Does anyone want to expand on how you've engaged from the ecosystem, or maybe how your business has been supported by that ecosystem that Ashley mentioned?
I can mention one thing. I know that, you know, because I started my career as a community banker, so I did that here in Lincoln for 11 years before I got into the, you know, fintech side of the world. And actually, I started at Fiserv in the fintech side because of the presence that they have here in Lincoln. But now I've kind of broadened my scope nationally, but I still take that kind of that attitude and environment with me. I traveled a lot of conferences all over the U.S., and I mean, the Silicon Prairie is a thing that's not just a phrase that we use here and are very proud of. People actually recognize that when I tell them where I'm from. One of the things that we've kind of used, at least in the fintech community, when it comes to the ecosystem that we have here in Omaha and Lincoln, is there's an association that I belong to called the Alliance of Financial Technology Companies, AFT. And there's a kind of an offshoot of that called the National Fintech Organization, NFO. And they have satellite meetings that they do all over the U.S. There's a big presence in Birmingham, big presence in Austin, big presence in Denver. Last year, they started doing that presence in Omaha, to where they're inviting, you know, startups, fintechs, banks, credit unions, just community leaders. And it was, I think, impressive to everybody who was a part of that outside of the state of Nebraska to see the response that we got from that. And we even had people flying in or coming in from different, you know, surrounding states to be a part of that. So I think that really speaks to the ecosystem that supports fintech just around here.
Great. Anybody else?
Yeah, I think there's a ton of examples of it. I mean, just the presence of this conference and the number of fintechs that are located here is tremendous. There's a lot of other tech companies here locally as well. You know, my office is the former offices for Huddle. I mean, so they walked so we could run, right? So, you know, there's some laughs. Yeah, they have a 7-story building now. We have a couple thousand square feet. But
that's our first points awarded for this
Hey, we're working on it. Pretty soon it'll be a flood town hall. So here we go.
I'll say one of the programs that we use at the state level heavily is the Intern Nebraska program. It's been an incredible way for us to get kids coming either in college during the summer or they're in their masters during the school year, and getting them. We've used computer science, we've done design, data science, pretty much all the hard technical skills. We've been able to leverage that and get more interns coming into our company and leveraging that resource, and that's been incredible for us.
Let's we'll jump into kind of where do we go from here, and I'll preface this with I noticed I think almost half of you, maybe more than half, when I said what's great about doing business in Nebraska, y'all said, hey, talent, which is really refreshing for the chamber to hear, because most of the time when I'm asking businesses, hey, what do you need here, and they say talent, it's their number one need too. You know, given all the assets that we have in education and maybe just not enough bodies to throw into the system, like what do you think Nebraska needs when it comes to talent? Is it more programs like Intern Nebraska? Is it a policy that Nebraska needs to be thinking about? How does Nebraska strengthen its position when it comes to adding to the high quality talent pool we already have? And I'll open that up to the whole group too, whoever wants to jump in.
I can take it real quick. Yeah, just start with it anyway. I think talent's the easy answer. A lot of time, because everybody's always been saying that, at least since I've been in my career for 15 plus years. It's like, what does Nebraska need? They need talent. Yes, and I think that's the easy answer because people just assume that given our geographic region and the population itself. You have to work for that talent, and I think my point in saying that is from a Nebraska standpoint, we need to have more of a entrepreneurial mindset. We need to just believe that we can be the center for entrepreneurship. We actually need to do it, of course, but I think it's more of a mindset shift than it is we can't start with what's wrong, I guess is what I'm saying. We can't start with what's wrong. We actually have to kind of shift our thinking to, we can do business here, we do have unicorns here, and we can do it again. So, mindset.
I love that.
Yeah, and I might just add on to that from a non-startup perspective, right?
Yeah, please.
Same kind of dynamic, which is, we have pretty strong intern programs tied up with the universities, Creighton too as well. But what we find is a lot of times the students don't understand where the opportunities are in fintech. Mm-hmm. So, individual companies trying to plow that ground and make themselves known is one approach. But, to the extent that this state starts to be known for that versus individual companies trying to farm it, I think is something to think about.
Yeah, I can to piggyback on that. It's probably less the talent piece and more the awareness piece. It is making high schoolers aware of the opportunities that exist here, both in startup and in large enterprise. Not just fintech, but all tech. But really, just the awareness of that. I'll say, I have two kids at the university, and probably it wasn't until about a year ago they even asked me what I did, care what my business is or anything like that, because they're just not aware of the opportunities that exist in fintech that we have. So it's not necessarily lack of talent in the programs that we have at the university and even at the high school level. It's this should be full of, half of these, not making any cracks about anybody's age here, but there should be a bunch of college kids in here. Learning about what we're doing from a fintech perspective, learning about different opportunities from big tech that exist in the state of Nebraska, so they don't go look elsewhere for those types of things.
I know nobody said it yet, but I think a winning football team would help. That was pretty painful on Saturday, I must say. But yeah, no, to your guys' point, absolutely. Having a very strong internship program where there is that awareness, I think that's an absolutely great point, that this room should be filled with a lot more college students for sure.
So the takeaway from this conversation is the Chamber of Commerce really needs to get the football team to have a winning record. We're a little bit more of a volleyball school, which we're very proud of.
School. Always been a bowling school.
Bowling school, that's right. Ben, did you have something on this?
I would add to that. Winning in football helps a lot of things in this town, but also, I think there's just a swagger that comes from winning, and I think when we're around a lot of people, I'm sitting next to a guy who just had his company go public, and there's a lot of really big things happening in this room, and sometimes in Nebraska we sort of look around, and I can say this as a relatively short male who's middle-aged, that we sort of go, I'm tall enough, right? I might not be 6 feet tall. No, there's a lot of things that are happening in Nebraska that are really big, and it's really important. And that's the whole purpose of a Flyover Fintech, is a lot of people are flying over this and they need to know about what's happening here, and we need to make some bigger statements about it.
Ashley?
I was just going to end on kind of a tangible thing that you could do, so that I'm challenging myself with right now. So we do about probably 90% of our business or even more outside of the state of Nebraska. And so when we're on a sales call, there's a lot of times where they'll say, where are you headquartered? And I always say, of course, Lincoln, Nebraska. And I immediately follow it before they can even speak with, I bet that's a huge surprise, or I'll say, that's not what you expected. It's automatically downplaying, Lincoln, Nebraska, and they didn't even ask for it. So I'm really trying to kind of change that mindset.
It's the other side of the coin of Nebraska nice, right? We kind of don't give ourselves enough credit sometimes. Yeah. Just since we're talking about how we tell that story, I just want to add that the Chamber, along with Lancaster County and the Partnership for Economic Development Visit Lincoln, the group of programs that are under the Chamber umbrella roof here in Lincoln, has been working for, I think, possibly the first time ever with an external PR earned media marketing firm. We started that work just barely at the beginning of the year. I think they came out here for the first time in February. Since that time, we have garnered 50 earned media stories that have seen, according to our folks, 300 million views. And that's in less than, 6 months or less than 8 months of working with them. So we feel like we're off to a great start. The reason why I mentioned that is stories like we're talking about today. Please make the Chamber aware of it. Brooke Zimmerman is our Vice President for Marketing and Program Development, and we can wear everybody's hat. We will help push those out through our firm, and they love it when we bring them big ideas about, hey, did you know this company is doing X, Y, and Z? Quite frankly, because it sort of surprises some of our partners on the coast, they're easy stories to pitch. They really are interested in what's going on in Middle America, particularly in spaces like this that might, I think, otherwise surprise them. So everybody take a note, call Brooke Zimmerman if you got a story idea. This is going to be so much fun to see what comes into her desk coming up here. Let's talk about other needs for Lincoln and Omaha specifically. We had a couple stories recently from some research done by the Exarban Foundation and the Omaha Chamber about just the relative rates of growth. I think that was a surprise for some of our friends in the legislature to hear that, maybe Lincoln and Omaha weren't necessarily growing at the pace that I think everybody in this room wants to see those communities growing at. What does Lincoln and Omaha really need to double down on to be more successful, whether it's in fintech of any size or stage of company or any other business growth? What do you all see as opportunities there?
But I think it's an awareness at the investment level. Understanding that there are certainly funds here, we talked about now that a little bit, there are investors here to start, either seed or A or whatever the series might be of funding into some of these fintechs. But if you garner that awareness around the country, you'll understand that, and I'm sure some of the others can speak to this. As again, I'm at conferences all over the United States. There's a feeling or a kind of an exodus, if you will, from the coasts. To say, from California, it seems like a little bit more so, but even New York, where it's a little bit harder to do business. And the talent acquisition part of it doesn't even factor anymore. It's not, there's not this idea. It's like, well, I have to be in, Silicon Valley to have best talent. It's, talent is remote now. So it's a matter of if your company can be headquartered somewhere that's most beneficial for you. It doesn't matter where your talent comes from, let alone that we do actually have great talent here. So I think having that awareness at that investor level to say we're with VCs or private equity firms all over the country and letting them know, hey, this is a great place if you have a startup. You just seeded some money to, you just got a Series A, wherever they're going, or maybe you're looking for your exit out of that company to a bigger investment. By the way, Lincoln, Nebraska, Omaha, Nebraska, great headquartered places for this types of things.
Anybody else?
No, I think that's a great point. As I reflect back, let's call it a post-COVID world where remote work is probably more important than it ever has been. Most states are in a unique position where when there are these migrations off from traditional centers, how do you make yourself the destination for that? And how do we promote that particular mechanism? Now, I've been in this state for a long time. And most of the communications I typically see are around how do we get the talent to stay? And we still need to do that. But there's a unique phenomenon happening with a migration of younger folks than probably me, trying to decide where they want to live their life and what kind of lifestyle they want to build for themselves. And so we need to think about how do we attract that pool of folks to come here.
Maybe on the awareness thing again, Omaha's a great little big city, I guess, if you will. There's plenty to do. So last week I just had most of my engineering team into town, and during the week we were at our office in Omaha. We were able to go out, go eat, great places to eat, great places to drink. And then on Friday, we took them, a lot of them are from out of town, We took them to Lincoln. On the way, I stopped at my family's farm, showed them what a combine looks like and like what a flower farm is. And then they spent the night in Lincoln, and then we went to a football game, right? And it was a perfect weekend. And they were busy the whole time. There's meeting good people, and there's everything they could possibly want to do, right? And again, I think that's just not told. Just as much as like we have successful entrepreneurs here, we don't talk about how great our cities and our farming communities and those types of things are.
I want to add to as well that, I mean, we did something similar. We brought in about 20 some people to come to a Husker game this weekend, and everybody was just so shocked about how much fun it was, the environment, and how much energy and engaging it was, and that was just really cool to see and experience. Another thing that I'm really surprised about with the number of people that I talk to, how many people don't actually know that the Omaha Zoo is one of the best zoos in the world? And I tell people that, and they're like, what, really? In Omaha, Nebraska? I'm like, yes, it is better than the San Diego Zoo, says TripAdvisor in 2018. So, like, we got to let people know that.
I would agree. I think there's a lot of things we have to know. As a bootstrapped company, one of the things that comes into play when you're early on is you're just looking for support, and you need a safety net. And we felt that here in Nebraska in a way that I know we wouldn't have felt in a lot of other places. When we went to pitch for money in Silicon Valley, they said, well, just move your headquarters here. And we were like, no, like I don't have that safety net. I don't know how to hire in the same conditions. There's a lot of factors there that make that a lot more volatile. And we were able to control a lot of those factors. What you don't talk about when you're an early stage startup is taxes. So some of those benefits that we might talk about later, that you start thinking, oh yeah, it is an advantage to have some employees in other states, and there's a whole bunch of other things. You don't think about that. So early stage, you don't really think about those things, but you really think a lot about safety net and how that feels. How can I go without a paycheck if I have to? How can I make things really grind it out as a startup? And so we did that for a lot of years in those early years. And you just need a lot of safety around you at the time when you're taking a lot of massive risks. So I think that's something that I can really credit Nebraska for. And there is a culture around that. We might not credit the ag industry as much, except for Kyle, right? He brings up like the ag industry, but we can see a lot of the state, and you have a lot of people. I'm a fourth generation Nebraskan entrepreneur, so there's a lot of farming in my background, and there's a lot of other companies, and when you look at that, you sort of have the permission to do that, and I think Nebraska gives you that permission.
That's a great point, Ben. Ashley, did you have something?
Quickly, kind of to add to what you just said, the connectedness component, I think, is probably undersold a little bit. I think once somebody gets super connected in the state of Nebraska, in any community, it's really difficult to convince them to leave. Myself personally, we moved to Atlanta and then to Iowa and then eventually home to Nebraska after college. And today, still, there's a lot of, are you going to move back to Atlanta? And I feel so connected in Lincoln that I actually can't even imagine that. And we need everybody to feel that way once they come here.
That's awesome. I don't know if he's still here, but saw Clay Smith earlier today with Speedway Motors. And since we're mentioning, oh, there's Clay. Hey, Clay. Since we're going to mention the Omaha Zoo, I have to brag that, and I'm going to, correct me if I get this wrong, Clay, USA Today named the Speedway Museum of American Speed the #1 automotive tourist attraction in all of America. Did I get that right? Y'all, that's the type of stuff we have right here in this community that has been built by businesses. This gets back to the awareness thing that we've been talking about. Like, how do we bang that drum, that much louder when we've got assets like that people walking in communities don't expect to see, but man, is it special. So for anyone that hasn't seen the Museum of American Speed, go check it out. They added the Answer collection. It's kind of amazing. I'm going to jump into some individual questions, and then after we zip through those, we're going to be coming up on audience question time, which I know is going to be much spicier than what I've been able to challenge these folks with yet today. So, JP, I think I'll come to you if I can. Talk about maybe some of the competitive environment that you're functioning in terms of what makes Exodus unique among self-hosted cryptocurrency wallet type of products?
Yeah, so when you think about cryptocurrency and storing your cryptocurrency somewhere, a lot of people might think of a platform like Coinbase or Robinhood. And these platforms are really fine. They can be easy to use. But when you use a platform like Exodus, it is what's called a self-custodial wallet. What that means is that you control the assets, much like you have money in your wallet. You have full control. In other words, Exodus cannot touch or control your cryptocurrency. And that's very important when it comes to the aspect of security. And you see things like exchange hacks. And so you can protect yourself against that by using a self-custodial wallet. Further than that, though, beyond that, what we really care about is making cryptocurrency simple, making it so easy that anybody from the mainstream can get daily utility out of it. So maybe you use your digitized dollars to be able to go buy groceries or send a friend some money, much like you would use Venmo. So that's the direction we're going, is removing all of the difficulty out of cryptocurrency, because right now it's still a little too technical to use, but in time we'll make it so simple your grandma will love using it.
Boy, my parents are going to be a big enough challenge as it is, but I can't wait to get there. Let's go to Kyle. A previous panel discussed NFTs at some length. If I'm being honest, I didn't understand enough of it. Can you explain why Pinata could also be important for the NFT ecosystem?
Yeah, so we actually power a significant portion of the NFT market today. They had mentioned OpenSea, Magic Eden. Those are the two largest exchanges or marketplaces of NFTs. So when you go there and you look at an NFT, whether it's an image, a video, audio, whatever that file is, underneath, we're probably the ones that are actually powering it. And then every individual person that creates an NFT most likely is also using us, again, to manage the files associated with those NFTs. That's not where I started with Pinata. The reason we started Pinata in the early days is I thought NFTs initially were going to be, and I wrote a blog about this in 2017, where I wanted one NFT, one token, to represent 1 acre of land. And what I was going to do is use combine data coming off of John Deere, and that was going to be stored on Pinata, and we would attach it to the token, and that's how we were going to tokenize 1 acre of land. My next attempt was actually at tokenizing a cow, and the way that we were doing it was we were using images, machine learning, now I guess we would call it AI, to analyze the muzzle and try to identify it. And so the reason I bring those up is it's not that NFTs are just Cabbage Patch Kids or something like that. What happened is that bubble, that huge NFT bubble, what it created was incredible rails for us to now represent other assets. And that's the thing that I'm most excited about and focused on at Pinata, is how do we get more assets on chain and represented as NFTs. Those are considered RWAs or real world assets, and that's where we spend all of our time.
Kyle, I'm giving you points for tokenized cow. That's a winning combination.
Her name was Bitsy.
Wonderful. Steve, I want to talk about Fiserv on the other end of the spectrum for a really, really big company. Central issue right now that's related to everything in fintech is that concern about fraud or cyber hacking, those types of things. For a company as big as Fiserv is, can you speak to the threat of fraud for your customers and kind of what nature of measures Fiserv takes to prevent that?
Yeah, look, I mean, for the amount of volume that process through our veins, a couple basis points here or there is a big number, monstrous number. And I'm sure, the conference today, there's been talk about, stable coins and AI and machine learning, and those are all the buzzwords of the day. But as a company that's been in the heart of fintech for decades, Those aren't novel concepts, and we've been using machine learning and data models to fight fraud and help issuers pick and choose good transactions from bad transactions for a long time, decades. What's new is, the unlock between the modeling services and the way the AI programs now can do point-to-point kind of vectoring and how that works. It's scalable, right? And so, when you talk about fraud, it comes in a couple different varieties, right? There's certainly just thieves, right? There's first-party fraud where people try to impersonate someone and open an account, and the way you look for that is different than someone who's trying to skim a card in a credit card reader and replay that. But like I said before, we have the opportunity and the blessing to sit right in the heart of that. We can see the DDA activities. We can see the card activities. We understand what payments are happening at the point of sale. So the big large language models now and the data learning models that are available help us push those monster databases together. Because at the end of the day, the fight against fraud isn't necessarily finding the good transactions and letting those happen. Those are easy. Finding the really bad transactions and killing them, that's pretty easy too. They're obvious. It's that piece in the middle, right? The false positives where the issuer might decline you and you have to call and say, no, that really was me trying to buy the $50,000 painting, right? That was me. Well, that was a false positive. The false negatives are the ones you don't catch because you're trying to give grace. And that's the space where the magic happens, and that's where the large learning models and the large database introspection is going to make the difference.
Thanks for doing what you do to keep us safe in those transactions. I'm always reassured, by the way, anytime I get a card decline and they're like, Jason, did you really want to buy that $50,000 painting? I have to say, yes, I need another one for the living room. But it's always reassuring that there's some stopgap there. I'm going on too long, aren't I? Ashley, let's talk about what's going on with Maptition. I find your company really interesting just because of all the pressures in terms of remote work, hybrid work, in-person work, if anyone's doing that anymore. Like, where do you think the modern workplace is trending in terms of that balance between those in-person and virtual roles? And are there maybe unique aspects of that for fintech companies specifically?
Sure. Well, currently, the 5-day in-office work week is dead. And that's a pretty bold statement, but I said currently. I think that could actually change. But what we're seeing, and from my seat, we're seeing 3 to 4 days in the office, usually Tuesday, Wednesday, Thursday. And in 2024, JLL told us that 88% of organizations across the board were offering some sort of flexibility. Last week, I was speaking at the World Workplace Conference, and 82% of that group said that they are still offering flexible work environments, essentially. So the biggest difference that I've seen over 2024 and 2025 is 2024 was very much at least through my lens here and some of this data, was we would like you to come into the office 3 to 4 days a week. We're probably not going to press on that. We're probably not going to do much about it if you don't come in, but we would like you to come in. 2025 has definitely shifted more to we are doing this, and now we need to maximize it, and we need to make sure that we're creating spaces that are conducive to having people in the office. So it was very much we're kind of thinking about it, we're going to, let you do it, but now okay, we're going to be in the office. Now, I was asked last week, do we see 5-day-a-weekers, organizations? I mean, in our business, it's certainly rare, and you could say that's because of the business we're in. But I definitely see the trend going back to that 4-day here in the near term. So what I think is more important, though, than the days in office is why people are coming into the office. So we found in some data that we collect that most people, so 62% of employees, say they come into the office because they want to see people. They want to be around certain people. They want to collaborate. They want to have the energy of the human interaction, which isn't going away for our organizations. And so Most of the time it's for the collaboration piece. So how we combat that is we actually offer functionality that says who's in office, who's planning to be in office, and who actually came into the office. And I'm sure there's some people, and I heard it already today, well, are you following me around? Are you big brother? We don't necessarily know every interaction. We just know that you came into the office. So a real tangible example of this is I'm on the second floor of the Nelnet space. Well, what if I want to go see somebody on the fifth floor? I maybe don't want to text or email or, all of those things. I just want at a glance to know if that person's in the office. So being able to very quickly and easily collaborate in that way. And then on the other side of that, from the administrative side, I actually can say what's happening in my office so that I know across all of my 55 locations how I'm actually utilizing that space. And then the real estate footprint can kind of fall in line with that. So I think the collaboration piece is key right now. I don't think we're going to see the 5-day-a-weekers anytime in the near term, but it's kind of an unpopular opinion too. But yeah.
The Chamber of Commerce is behind the curve on this. We are 5-day-a-weekers, and staff members that are here, we're not changing that anytime soon. So we'll continue to be the exception to the rule. Ben, let's talk about social insurance. And you mentioned this in one of your comments before, like banking as an industry, financial technology as an industry has kind of become less about that personal banker relationship, the personal relationships. I can't remember the last time I, deposited a check at the window in person after signing the back of it and filling out the little slip. So can you talk about it, like in a world that's under those types of forces and so much automation and AI, what's the importance of effective marketing and helping financial institutions showcase that work that they can do?
Yeah, well, what we're seeing with a lot of banks in particular is that they're starting to adopt more and more fintech solutions, but there's a challenge in that, right? Like if you're used to interacting with your customer across a desk and saying, hey, here's the instructions, all of a sudden when you start to remove that and you go less to your bank, right? And it's a little bit of a crazy statement for many of us. We don't do that, right? But as they're moving further and further away from that, you have to be more and more precise with your communication. So like a banker handed me their latest little chip that I can use. I used it at the coffee shop earlier to test out how their experience worked loading money into their drop band app and then conducting transactions. But that whole experience now doesn't involve a banker. It doesn't involve the bank. In fact, most people probably don't know which bank it is out of Mississippi that I got this from, right? So that when that all changes, it really hinges on that experience more and more. And so for all of us working in and around fintech, that little experience gets so much more dramatic, and every little word and every little statement gets scrutinized and has to, because the experience is just so hyper-focused, where when we're in person, I can say, oh yeah, you just avoid that, and then you can move over here and do that thing, right? So it puts so much more weight on that experience, and that's I think where all of the innovation has to happen for a lot of those little apps. I mean, they work, but also they just need a lot more precision.
Awesome, thank you. Just a quick program note for our folks with the audience question microphones. I'm going to do one more individual question, then we'll go to audience questions. So folks, get ready if you have one. And just checking the time, we're going to get to the bar early, if not on time today. So I'm going to make sure that we take care of you. But Joshua, I wanted to finish up this section with just a question related to the FinTech Alliance's work that you've been doing and some of those organizations. And it's really about, how do we build on events like this? I hope Congressman Flood continues to bring back this type of quality programming and this experience back into Lincoln every year. But, what changes have you witnessed in the Nebraska fintech community throughout your career? And then, where are we headed next? How does Nebraska build on that for this industry specifically?
Yeah, I think it's a lot of it is adoption. And, I can get a little spicy, I guess, with the panel that
you'll get points if you do.
I was going to say the panel that came before me, where we had folks from Chime and Square Block on there. It's kind of the adverse of what they were talking about, and I'm not trying to say don't listen to anything they just said. But let me just quick raise of hands. Who in the room represents a bank or a credit union? There should be way more of you in here, first off. But It's up to you that we have the engagement from fintech and that more fintech gets adopted and it becomes more successful. And the reason for that is community banks and credit unions win against your Chases and your Wells Fargos of the world. They win on relationships, loyalty, and trust. And that comes from being the relationship to your end user and customer. So what the folks at Chime and Square were talking about is embedded banking, embedded finance, it's sometimes referred to as. It's not a bad thing. It's certainly a good thing. Banks, you can get a lot of deposit dollars from being kind of a sponsor bank for that, being a true banking as a service bank. The flip side of that, though, is what's more popular and more widely adopted in the community financial institution space is what we call embedded fintech, which is where you own the customer relationship. You are the point of contact. Kind of Ben's point, they can walk in and talk to you, or they can talk to you through your digital app, whatever it might be. You own that relationship, and then you take the fintech services, like a crypto type service, maybe it's a credit scoring service, maybe it's a Robinhood type service where they want to do fractional share investing, and that's embedded into your banking ecosystem to where you own that banking relationship, you own the customer still, you're still their primary point of contact, but now you're offering a competitor to Robinhood. Now you're offering a competitor to Square. So you're maintaining that relationship, that loyalty and trust. So by doing that, by embedding those fintechs, not only are you, creating a bigger ecosystem, beneficial for your customers and obviously the growth of your brand, but you're creating a bigger ecosystem for the state of Nebraska and for all of, the folks who can hopefully be on future panels here and a wider audience for this. Is you're keeping community banks where they need to be, which is kind of the lifeblood of our country. I mean, you think about, small business being the lifeblood of what's coming next for, the success of our economy. Community banking is what's sponsoring that. It's not going to be Wells Fargo that does that. It's going to be community banks and credit unions that are going to, empower small business to be successful, and small business is successful, our economy is successful, and our country is successful. So I know it seems grandiose of an idea to say it that way, but I think that's really fundamentally true, and so that's why it's so important that we wrap our arms around fintech and really learn more and embrace more.
That's great. Thank you. Let's go to audience questions. So I see a hand up right over here.
Hi, Matt McKeever. I'm an attorney in Omaha. I do have a question that builds on your answer, Josh, that you just gave a few minutes ago. I'd like to hear about the rest of the panel, their opinion about promoting investment in fintech here in Nebraska and maybe regionally. We've talked about talent, we've talked about promotion, but I'd like to hear from the rest of the panel about what they believe we can do more in the way of investing. I know, JP, you have a rather unique story about fundraising or raising capital, and maybe we'd like to hear about that, but I'd like to hear the rest of the panel too about their thoughts about promoting investment in fintech.
I'll say that Nebraska can do a lot on the regulatory front, right? So right now in Washington, D.C., you hear President Trump talk about making America the crypto capital of the world. And so Nebraska has an opportunity to seize this moment and do things like where we just saw the Genius Act was signed. And so what that does is that gives companies and financial institutions the ability to create digital dollars that exist on the blockchain. So Nebraska can embrace this, much like Nebraska has historically embraced these sorts of things. I know that Congressman Mike Flood, back when he was a state senator, he created the digital asset depository, or he led the effort on creating that here in Nebraska. And so we can take these moments, to seize these moments and say, hey, let's be the state where you can come here and you can create a digital dollar. Because effectively what these digital dollars do is they allow companies like Amazon, like Walmart, not have to pay 3% to the credit card companies. And that's a really important thing for consumers, because those savings will be passed on to consumers. So Nebraska can really, I think, take a stand there on the regulatory front.
Anybody else with a response? Yeah.
I think a little bit of a simpler answer, maybe just to kind of throw something out there. I think we need some sort of like playbook for early stage companies, because I think one of the things that, as I'm sitting here thinking about, the things we've done, not every startup has been through it, 3, 4, 5 times like some people on the panel here. And so one of the things that I think we need to do in the state of Nebraska, just to your question specifically, is just connect people to the right people and things. Like, we need to say, have you talked to this person? Have you talked to this person? And it's not just specifically in Lincoln, but in Omaha and greater Nebraska. It's almost like a little checklist of sorts. Have you done all of these things? Because a lot of us have the unique perspective of being connected, and that is not always the case.
I'll be a little contrary on that one, and I'll say that I think one of the things we have to do as an investment community, now that some of us are, entering a little bit more of that side of the space, is we have to just get together. Like, when I was trying to raise money and was horribly unsuccessful at it, I drove up to Yankton, South Dakota, of all places, a small town, and I met for lunch with 20-some accredited investors in Yankton, South Dakota. Do the math. That would be a room of 300 and some in Lincoln, right? So when we brag about Nebraska Angels being all that cool, they're like, no, it's not. 20-some in Yankton, South Dakota is a much bigger deal. So I think it's really a capacity that we have to get investors together and say, hey, why don't you start getting together with your buddies, right? Start talking about investing in stuff, because that's what they're doing in places like Yankton, South Dakota, of all places. It's population 10,000 in Yankton, right? So when you start doing the math, right, like, we should be having much bigger, much more consistent groups. It doesn't have to be just one angel group. You can have a ton of them.
Good stuff. Anyone else? Another question from the audience. Sir, up here.
Hi, I'm Kevin Crown. I've asked a few questions, so sorry I keep standing up. But I thought it'd be really fun to put you guys on the spot. So you guys were talking about...
trying to get free drinks, I think.
That's right. Yeah. That's right.
Maybe that's the ultimate goal. No, I'm trying to get a job, actually. So I wanted to put you guys on the spot. You said the talent pool here is Nebraska's greatest, is its greatest thing. And so I just graduated my BBA in accounting and finance. I'm currently at UNL for my master's in business analytics. And do you guys know if there's any job opportunities at your companies that could possibly fit a role for me?
Oh, let's make a deal.
I know we certainly do have job openings, so come talk to me afterwards.
100% I will. Thank you, sir.
We're always looking for good people across the board.
I'll ditto that, and more than one opening, by the way.
Exodus.com/careers, we have openings, but the one thing is you have to be willing to accept a salary in Bitcoin. So I'll put you on the spot.
Ooh, that's a tough one. I think I'd be open to the challenge of trying to convert that Bitcoin into how to pay my rent. But but thank you guys. Yeah, I'll run up there after I'm done and try and talk to all of you. Thank you so much.
Congressman, just a note for next year, I'd like to close the program and do like a bidding opportunity or an auction for hiring talent, like on the spot. How cool would that be? One last chance for audience questions here.
We have a question up here.
Thank you.
All right.
I'm Maria Whitmore with the Nebraska Commission on Latin Americans, where I'm a volunteer. And just wanted to mention this awareness that you are mentioning is so important. We have an event with high schoolers so they can explore very innovative careers. And it's going to be at the end of October, so you're all invited to come and feature your companies. And they are sophomores and up, and we're working with Central Community Colleges all over Nebraska with their apprenticeship programs and with the Nebraska Exarban Foundation. They have also the opportunity to explore the governor has established this platform where they can explore possibilities of micro-credentialing and also find apprenticeship programs and so on. So I highly recommend that you all join us for this. It's a yearly event, and so we really want to feature all the fintech opportunities for high schoolers and up. So thank you.
I'd love to get information on that if you can track me down after we wrap up here, please. Let's see. So Congressman's back up, so I think that means I'm getting the hook. I want to thank everybody for sticking around. Can we thank our panel today for letting me pick on them? You guys have been great. And I think we'll kind of exit that way. And Congressman Flood, I will turn it back over to you. Thank you so much for organizing the program today. It has just been great.
So if this were a jury trial, this was the closing argument. How many of you left here are non-Nebraskans? Raise your hand. Okay. We got a few left. Okay. A couple of fast facts about, again, why we're doing this. Pete Ricketts is now on the Senate Banking Committee, where he is shaping policy there, and he put an amendment in the Genius Act that says that any state that has adopted a regulatory framework for stablecoins will receive priority attention from the Federal Reserve. I am on the House Financial Services Committee, and the reason I got on that committee was, having been a Nebraska state senator in this space, I saw an opportunity as someone in Congress to be able to shape and mold an evergreen area of federal law that's going to occupy a very important role in federal policy going forward. And that's why I came into Congress and I begged and pled to get put on the Digital Asset Subcommittee, and it has allowed me to protect Nebraska's interests. And so if you are a fintech wondering where to locate, when you invest in this state, our state government invests in you. Meaning, if you say to us that you want to hire our very smart farm kids, we are going to make this the best possible place to do business from a government relations standpoint that you can even imagine. And good luck getting a meeting with the two senators in some of our states, and some of our nation's largest states. You get firepower, you get results, and you get an opportunity to grow your business and to grow your revenue and to create wealth. And when you grow that revenue and you create that wealth, we want you to bring our citizens that work for you, that make you successful, along so that they can enjoy the ride. And that is the whole value proposition to anybody that's in the fintech space. The other thing I'll say is, I have arguably, you saw the level of talent that works in my congressional office. I love my colleagues in Washington, and I love my colleagues that I worked with in the state legislature. How many government congressional offices could pull this off? I would argue that we have some of the best congressional staffers in the House of Representatives. And you saw Kurt Bliamptis here, who ran the panel earlier. He went to Bucknell. He did more research on me than I did on him when I asked him to come work for me. And Kurt in Washington has a pristine reputation as being one of the best on Capitol Hill when it comes to financial services. You see Taylor over here. Taylor's grandmother was the governor of Nebraska, 1986 to 1990, and he probably had his baptism shower at the governor's residence. He pulled this conference off because he's got exceptional skills. Tyler over there is Taylor's understudy. The people who work for me in Washington and in Lincoln and in Norfolk and Columbus, they are the best of the best, in my opinion. Of course, I'm biased. They don't say no when I tell them I want to do town halls. They don't try to keep me away from engaging the public, and they help me do it in a way that still lets me be successful and be as engaging as I want to be. So the last factoid I want to share with you, because we've talked a lot about Lincoln, we've talked about Omaha, we've talked about Telcoin being in Norfolk. The one town, and I don't know if he's still here, is the mayor of Bellevue, Nebraska still here? Okay, he was here earlier. To those from out of state, you probably don't know this, and for national security reasons, we don't talk a lot about it. But 80 feet, or many feet underground, off at Air Force Base, 40 minutes from here, is Stratcom, the headquarters for our nuclear defenses. We have a 4-star admiral now, we have a 4-star general now from the Air Force. We'll have a 4-star admiral at the change of command ceremony. We have the most security troops in the nation because that base is where decisions are made about deploying our nuclear triad. which means that in Omaha, Nebraska, Bellevue, Nebraska, we have full command over all of our underground ICBMs that are scattered around our nation. We have full control over our nuclear submarine fleet, which are places that you can't even imagine on any given day. And we have full control over the decisions to deploy our B-52, B-2 bombers that are up in Minot. They're in Montana. They're in Rapid City. You know that they're in St. Louis, and there are other places. And they have forces in Kadena, Japan that they oversee. They have ports in Greece that they oversee. Offutt Air Force Base has 10,000 of our nation's brightest military servicemen and women. They are trained in counterintelligence. They're trained in weapons systems. They're trained in monitoring every single rocket that's fired from every single country 24 hours a day. Recently, when we had a mission into Iran, our operations center at Stratcom was at the center of that activity as we attacked a foreign nemesis with pretty significant payload that could have triggered a response that would include nuclear weapons. I say this to you because when you question what kind of talent do you have in Nebraska, we have the talent that has been protecting this country since the Cold War started, when General LeMay brought it to Omaha. And that talent is available to work for your fintech and work on fraud and cybersecurity and protecting assets. And it lives right down here. And they know that when they retire, they don't have to pay income on their earnings from their retirement. My closing argument to you and to the fintech community is, if you really want to build a business that plays in this space and you want the relationship with your legislators, you want access to the nation's best in cyber, think about this, we have people in the NC3 project that have to make sure that in the darkest day in civilization's history, that the President of the United States can initiate an attack that will end civilization. That's scary stuff. You got to be able to build networks and communication systems and work on internet protocols that have the highest security levels in the nation. And so I guess I want to reinforce for you, when you think about where your business is going and where fintech is going and what kind of access to capital you have, what kind of access to talent you have, and what kind of regulatory environment you live in with the nation's only unicameral, there's a reason we have the most insurance companies in America. It's not just Warren Buffett. It's that we have the best regulators in America on the state-based system, and we have a stable business environment. It is unmatched in America. So with that, I want to say, get yourself to Nebraska, hire you these young men like this and these young women that are going to our schools, that are in all of our schools, and especially here at the University of Nebraska. Please continue to engage with my office and enjoy the rest of your time. Thank you for being here.